Yo, what is up for everyone on the YouTube replay? I hope you're having a great day. We have a pretty interesting day in the stock market today. Like a lot of tech specific is down, but then there's a lot of like interest rate sensitive, like defensive, like just a weird market today. Like a lot of random stuff is like really green today. Like Google is up 3.5, Carlyle Group is up 5, but then we have some big losers like Webull, Bitcoin's down, CEG, AMD. So yeah, let me give you a quick portfolio update. Hope y'all are having a great day. I didn't buy much, but right before the stream, I did buy a little bit more Webull on the dip. They literally reported earnings yesterday at 4 p.m. and I was really happy with the earnings. Again, as much as I love Webull, I'm not going to have them as a major size position, especially in this market, in this environment. You want to be cautious, but our newest largest position in our Roth IRA, ticker symbol HCA, is having a phenomenal day. It's actually a new all-time high. So this stock is at an all-time high today. We're only up 5% on them, but I'm super happy to be a shareholder there. And yeah, actually check this out. Like McDonald's is up, Carlyle Group, United Rentals, Google is up. So actually our both of our Robinhood portfolios are green on the day, but we head over here to our Moomoo portfolio. We're actually down 0.5%. Actually, surprisingly, our Murphy USA, our oil stock, has been doing quite good the past couple of days. We've been dollar cost averaging into this one. This one of my more favorite oil and gas plays out there because of all the buybacks. But yeah, Comfort Systems is down a little bit. Coca-Cola Consolidated was at an all-time high yesterday, so I'm not shocked to see them having a little healthy RSI retrace. Powell Industries, I am surprised to see this one fall 4%. You know, very cheap valuation. I really like Powell Industries. Hey, what up, R Hunter? What up, Walk-In? Hope y'all are having a great day. Yeah, this is our Moomoo account where once we buy a stock in here, I try not to ever sell it. And then we have our Webull portfolio. This is known as like our risk-on growthy account. Let's see what's up on the day. Actually, our Pfizer is we're green on them today. A lot of, healthcare names are super green today. A lot of defensive names like McDonald's, like Walmart. But yeah, AMD is having another rough day. Yesterday was rough for them. Yeah, let me check out the candlesticks on that one. Yeah, there's been a slight bleed out the past 7 candlesticks on AMD, so they're around $200 a share. But I'm not complaining. I'm still up 60% on our shares, but we were just up like 100% on them. But yeah, that's our Webull portfolio. Here's we've done terrible in here. This is why you don't listen to me. We've definitely underperformed. If we go click to our open profit and loss, kind of in the top left there, we're only up 6.68% on the day, or open profit and loss the whole time I've had this account. So yeah, we've definitely underperformed. So yeah. All right. Hey, what is happening to semiconductors? I'm down across the board. Yeah, actually, let me check that out. I haven't really looked at that. Let me look at the mega caps. Yeah, Nvidia's down 1%. Here's how we can really check on the whole semiconductor industry. You go to ticker symbol SMH, and so the SMH ETF is down 0.7%. But that's after yesterday's massive red candles. So anyway, if you don't, this is actually a really cool ETF. If you like, I don't know which one to buy the dip on. Do I buy the dip on Nvidia or AMD, or I don't know which one? Well, here's kind of a way where you don't have to pick. It's like this whole ETF right here. Check this out. By market cap weighting, it's Nvidia, Taiwan, Broadcom, Micron, AMD, ASML, Intel, Lam Research, like all these great ones. So actually, this is a really cool ETF. Hey, Catherine, what's up? Bull after earnings. Unfortunately, I don't think any of the broker, they just came out with earnings, so we don't have them down here yet, but it's hard to see. But they huge beat on revenue. It's on the very left there. The analysts were expecting 137. They did 156. The revenue is up 50% year over year. The EPS expected was 2 cents. They did 7. And the EBITDA was a huge beat. I was super happy with Webull earnings, and that's why I actually just bought some of them. Or is this the earnings right here? Yeah, okay, no, it is loaded down here. So check this out. We can look. Yeah, check this out. The sales are up 55% year over year. That's phenomenal growth. It's finally deleveraging the balance sheet, from the IPO money, and they made 36 mil of net income, and that was real too. Like they're actually super net income positive. I really like Webull, and what I like about Webull specifically, why I'm more bullish on them than the analysts, is because Webull, that's this brokerage right here. I've had their brokerage for many years. They actually just added in prediction markets and crypto back to the app, and I think they're going to make a lot of money on those. And that's why I actually bought some more Webull today, right before the stream. Again, as much as I love Webull, as much as I love the stock, I wouldn't have it as a major size position yet. I'd nibble on them here, but yeah, we did buy a couple of shares today, yesterday, and the day before. So yeah, we have been safely dollar cost averaging into them. Wow, HCA is up 2.5%. That's an all-time high on this company. So that's pretty cool. Hey, but yeah, what's up, Catherine? Any advice on when to sell a stock? You sell a stock when you no longer believe in the company. And if it's like, it's sometimes it's worth it to take a loss on a stock, but some losses like UiPath, Zoom, Sprouts Farmers, Axon, there's no way I'm going to recognize the losses on these companies. They're just too cheap to sell. I'm certainly not adding or buying more to the positions, but it's when you like fully can't trust their story anymore. You can't trust them. So yeah. Um, all right. Well, or sometimes it's not that you don't trust it. Sometimes you can like rotate. Like I've been considering this, for my age, I really shouldn't own Pfizer. I'm thinking about maybe selling Pfizer and allocating it if we get a crazy dip into some of these other names to get a better percent CAGR. But honestly, some of my biggest regrets ever, more so than having crazy losses on ChargePoint stuff, some of my biggest regrets are actually selling out of high quality names for a double and a triple. Like Robinhood, for example, I was buying this stock at 9, 10, 11, and I sold 50 shares at $36. And today, Robinhood is 105. We're up 600%. We would have made so much more. I regret every share I've ever sold a Robinhood, SoFi. So, okay, let's see here. My portfolio is cooked. Hey, what up, Luca? Hey, today, that's why you got to have a diversified portfolio. It's like a mixed bag here. Yeah, this portfolio is down 0.3, but our Robinhood account is up 1%. This is, after the crazy downtrend we had yesterday, but yeah, this is actually known as my dividend-only portfolio, where every stock in here pays a dividend. But as you notice, most of these are like dividend growth companies like Meta, Google. Here's my total percent change on every stock. Only stock we're down on is Carlisle right there. But okay, they're up 5% today. Yo, do you ever care to buy crypto? No, I'm just not good at crypto. There are times where I've regretted not owning Bitcoin, but if I was going to own crypto, I'd probably just own Bitcoin and Ethereum, but I actually don't own any crypto. What do you think of Eldon Pharmaceuticals? Yeah, if you got any stocks I'm going to look at, can you actually give me the ticker symbol? I'm actually not sure what that is. I've never heard of that. If you give me the ticker symbol, I'll check it out for you, though. What up, Joe? Someone said PINS, please. Yeah, let's do pins right here. This is Pinterest, that social media website. The numbers are decent here, actually. Let me go to the earnings hub because there was some interesting news. So it was a mixed bag. There was good and bad news. So advertising revenue grew 54%, grew with a 54% increase in ad impressions, though pricing declined 24% due to higher inventory impacting over ads. So something happened there, but this is really impressive. Monthly active users, they have 600 million monthly active users, up from 537. So they have a lot more daily active users. 71% of the revenue is the US. And usually they make all their money in Q4 of every year, Christmas time. But Q3, they've already made 58 mil this quarter. Actually, what's so cool about Pinterest is their freaking fortress balance sheet. You're not going to believe this. So if we go to their cash on hand, they have $2.7 billion of cash and they have no debt at all. So they're actually putting their cash in these 1 to 3 week treasury bills, making them interest. So if we go to their interest right here, normally this is like negative for a company. Usually companies have debt and they're paying negative interest, but since they have so much net cash, they legit made 28 million in just interest on their cash. That goes straight to the bottom line, adding more. That's how the operating profit was 60 million, but the net income was 90 million. This is the before tax number and before interest. The net income is the after tax number and after interest. But because they have so much positive interest and negated their taxes. Anywho, what's the growth rate? Let me check out the sales real quick. I know it's kind of been a slow grower. Let's see here. Actually, this is good double digit growth. 16, 15. I don't know. What's the forward PE? The forward PE, okay, at 35. So they're trading at 35 times next year's net income. So, because if we go back to Q4, it says they made 1.85 billion. They didn't actually. They only made 200 million. So that artificially inflated their EPS this quarter, which artificially makes their PE ratio look lower. But honestly, this might be still, honestly, $24, sadly, is probably a fair price, if not a slight premium at a 35 PE. But honestly, that fortress balance sheet, the risk reward is starting to look decent. But hopefully that was helpful there. They're working on making a TikTok shop for interest by working with Amazon. Oh, hey, that could bring some new revenue streams. Don't you think Pfizer is the best dividend stock that pays a 7% APY? Yeah, it's definitely one of the better ones. Again, I might sell Pfizer. The one reason I bought Pfizer mainly to maximize my dividend income, or for that one stock. For my age, I actually just bought Pfizer. I got 29 shares in them. I might consider selling them in the future. But one thing I love about Pfizer is the fact that they just acquired Metsera, which is incredible. They're now going to be in the top weight loss prescription competitors, a huge competitor to Ozempic and Zepbound. So that puts them in a weight loss play. But Pfizer stock is the same price that it was in 1998. So if you bought the stock in 1998, it's literally the exact same stock price. But during that entire time, you've gotten a 6.7% dividend. So you literally get a 6.7% dividend yield. So you get 7% of your money back here in a dividend. And then you just pray for maybe 1 or 2% stock price appreciation for a total return of 7 to 8% a year. Pfizer, I wouldn't have it as a major size position. Here's what I do like as well. If we go to their net income, they had some one-time adjustment that quarter, but they're making easily, we'll call it $3.5 billion of net income a quarter. So they're making $3.5 billion of after-tax net income a quarter. And how much does the dividend cost? Right here, the dividend cost $2.44 billion. So as long as they're making over $2.44 billion, and I want to see them make significantly above $2.44 billion, and they have, you really look at the operating profit, that's before the taxes, but incredible. I think the dividend is safe. Where do you trade on? Yeah. Hey, by the way, this is a software. It's my favorite brokerage right here. It's in the link tree in my bio, very first link there. It's a broker called Moomoo, my favorite one. Okay. Hey, what up to Katrina Zamaji from YouTube? Hey, good to see you. JVM. I'm buying some CELH cheap. Oh, let's do it. CELH. They actually, one thing that really impressed me was how the organic Celsius brand grew. They also, I have a lot to say. Pepsi just took a 7% stake in this company, and Pepsi didn't give them any money for it. They gave them Rockstar Beverage and also distribution and like production of their products. So they actually had a $250 million distributor termination cost linked with transitioning to PepsiCo's network. But if we go over here, the total revenue is up 140%, but just the organic Celsius brand, just the Celsius brand alone, organically grew 44%. And they own Alani. I love Alani. But yeah, if we go to their net income, it says they lost 61 million net income this quarter. They didn't actually. The core business actually made 166 million net income, but they had that one time switching over to Pepsi fee. The sales are up 172%. Incredible. The growth is back, obviously from the acquisition of Rockstar and Alani, but this is phenomenal news. I think the margins will slowly go up as well with moving to Pepsi. So what's the forward PE? That's the question. 28. That's not nuts. Another phenomenal company that's, I think, at an all-time high today. You won't believe it. Monster Beverage. This industry, but Monster traded a 33 PE. Celsius is at a 28. So, we also own the Coca-Cola bottler, which also is just at an all-time high pretty much. Okay. I'm purchasing some SoFi today. Let's do SoFi. I do own this one. Oh, we can look at Rocket Lab too. And we got to look at KMB. Sorry if I don't get to all the stocks. I want to get to all these. Don't worry. But yeah, here's SoFi right here. This is a fintech. I do own this one. Full disclosure. I regret every share I've ever sold to them, just like Robinhood. But we got 24 shares of SoFi. Here's why they deserve this crazy multiple. What's the forward PE? So 40 forward PE is still a slight bit expensive. Like there could maybe be a little bit more down for them to go. But honestly, I love SoFi. Like I really do. Beating every analyst expectation. They're a fintech. They have their own banking charter. If we go to their financial services specifically, it's up 76%. After grew 101, after grew 140, after grew 280, after grew 290. Like it just hits a new record every year, every quarter, and no analysts were expecting that. And we can see the analyst expectations. They beat on revenue every quarter. They beat on EPS, which is net income, and on EBITDA, triple beat. So that's why I think people are really starting to take SoFi serious. They're making like 100 mil plus in net income a quarter. The growth is there. So yeah. What do you use for stocks? Yeah, hey, again, this is my favorite platform to buy stocks on. This is a brokerage called Moomoo. It's in the link. If you want to get this brokerage I'm on, it's in the link tree in my bio, the very first link there. Or I'm not sure which one you're talking about. All of these brokerages I'm on are all in the link tree in my bio, but out of all three of these, this one is my favorite, the very first link there. It's free, costs nothing, no commissions at all, no fees, nothing. So, okay. Rocket Lab, let's do this one right here. Is COKE and KO the same? No, they're completely different companies. This is the Coca-Cola bottler. And they have a really low yield of 0.61% dividend. And then, there's the main Coca-Cola. They have completely different performance. Like, here's Coca-Cola stock. This is the one you mainly buy for the dividend. Here's what's cool about Coca-Cola. Like you get a 3% dividend and you also get like 3 to 4% stock price appreciation every year. I don't expect Coca-Cola to outperform the tech-heavy S&P 500 in the long run, but you should legit get like every year at least, or like 6 to 7% of your money back a year, like easy. All right, let's go to Rocket Lab right here. This is one of my more favorite space companies. They just completed their Geost acquisition, which I like. But let's actually see if let's go look at their news down here. Rocket Lab Explorer spacecraft launched successfully for NASA Mars mission. Rocket Lab completes defense mission for U.S. military from Wallopole's Island. It was a 14-month contract. So they have a lot of government contracts with NASA and JAPA, which is like the Japanese NASA. But if we go to this, is what I like. If you go to their space systems revenue right here, this is great growth. Revenue's up 36, after grew 80, after grew 16. So first ever $100 million quarter. So $114 million revenue there. And then if we go to their other business, their launch services, it also grew 100% year over year to 40 million. So both businesses are booming. Beating on expectations. Revenue is supposed to go from 120 to 180. They did also just acquire Geos. That's why the cash from investing activities was negative 200 mil, and that's also why the balance sheet kind of bumped up there. But I like that. But bad news is they're still burning through 50, 60 mil in net income a quarter, but they can afford it as long as they keep up that top line growth. I like them. They're just not the kind of company for me to own yet. That being said, I would not have this as a major size position. And I have a lot of stocks like that where I love them. I love their financials and everything, but I can't trust them with a lot of money, like PSIX, Toast, Axon. Like there's so many stocks like that where I love them, but don't want to have them as major size. Same with my Roth IRA too, like CRMD and Innodate. And Webull, I just bought a bunch or a bit more Webull today. They reported earnings yesterday. I was super happy with earnings. All right. Hey, boss said check Amazon. Yo, Amazon has given up like all its gains since earnings, which is crazy. I've been dollar cost averaging into this one. You can see on my buy orders there. This is my never sell portfolio. I'm never selling Amazon. I'm going to diamond hand Amazon till the day I die because this is a company you just want to never sell. If we go down, this is the main reason. If we go down here to their cash from investing activities, and some investors are questioning this, they legit spend 30 to 40 billion a quarter on new assets, new companies, new investments, on chips, on AI. That's crazy. If this number was positive, that means they're actively selling out of their own assets, but cash from they're investing 20 to 30 bill a quarter. You don't want Amazon as competition. Literally, this is an ETF in one: subscription play, robotics play, cloud play, grocery store play, subscription play. It's everything in one. Like grocery store, if we go to their cloud business, specifically their AWS, it's over 100 billion of revenue. That's their most valuable business, brings the most to their bottom line. But yeah, we can see their online stores are 40% of the revenue, third-party seller services, AWS, advertising, subscription, physical stores. Yeah, they're like a Instacart, a UPS, a Walmart, an Oracle Cloud, a Rocket Lab, a Rich Tech Robotics, all in one. They're a beast. All right. And they're printing net income, actually. If we go down here to net income, this is what's nuts. They legit, net income is 21 billion, up from 15 billion, up from 9 billion, up from 200 mil. So these are crazy net incomes, and they're expanding net margins. They now have double-digit net margins. It used to be a tough buy, a year or two ago, slow single-digit margins, but now they're like really making good profits. So yeah, and they don't pay a dividend and they slightly dilute you, and I'm okay with that because they're so innovative and invest so much in the future and future growth. All right. Palo Alto. What up, Martin? I love Palo Alto Networks. You know who also owns Palo Alto Network? Is the homie Nancy Pelosi. Actually, did she do any recent changes? Well, oh well. But if we go down here, she owns Palo Alto Network. This is my favorite cybersecurity stock. But let me go see what the earnings were. I wonder what happened there. Because they gapped down. CyberArk acquisition? No way. Palo Alto Networks to acquire Chronosphere for $3.35 billion. Partners with IBM on quantum security. Whoa. So they're not only acquiring CyberArk, which that's another stock, they're also acquiring Chronosphere. I've never heard of them. So it looks like they're doing a bunch of M&A. I'm actually super happy with that. They can afford to do it. If we go to where does the revenue come from? This is a subscription model company. Literally, if we go to it, it just hits a new record every year, every quarter. Yeah, hey, if you want to get this brokerage I'm on, yeah, it's in the link tree in my bio, very first link there. All these brokerages are, I'm not sure which one you're talking about. Yeah, this one's my favorite here. Some people asked there. Yeah, link tree in my bio, very first link there, broker called Moomoo. But yeah, Palo Alto Networks subscription model play, and they print net income. If we go to the net income down here, they easily make 200 to 300 million net income a quarter. And the free cash flow is even better. This is how they can afford the acquisitions. They don't pay a dividend. So yeah, they can afford to buy some companies. So yeah, pretty cool. PanW valuation still high though. Even after the dip, they trade at 86 times next year's net income. But those acquisitions are really interesting. Ooh, which one should we do here? Cake stock. Yeah, the Cheesecake Factory. This one's really hyped up on YouTube and stuff, but I don't really see what's so good about this stock. They're actually, sadly, the Cheesecake Factory is the same price that it was in 2013. And here's why. It's actually because of the slow growth. Yeah, hey, again, if you want to get this app I'm on, it's in the link tree in my bio, very first link there. This is actually a software. It's a brokerage where you buy stocks on. But if we go to their main business, the Cheesecake Factory restaurants, this is not good growth. It actually doesn't beat inflation. Sales are up 0.5, 0.9, 0.7, 1, 3, 3, 1. Like, that's terrible growth on the Cheesecake Factory. But they're still making net income every quarter. This is the good news. They do pay a dividend and it is safe. You get a 2.5% dividend. If you go to their net income down here, they're making we'll call it 40 to 50 mil in net income a quarter. Let's go see how much the dividend costs. The dividend cost 14 mil a quarter. So as long as they're making over 14 mil in net income a quarter, they can afford the dividend. But we kind of just want to see the growth come back. Like, what's the PE ratio on this one? 13 PE. Yeah. Well, honestly, one of the reasons the Cheesecake Factory is probably struggling is because of just the whole industry. Like, I'm not just blaming Cheesecake. Like, if we go to Wendy's, RIP Wendy's, they're at an all-time low pretty much. Look at that. That's not too good. Also, even Chipotle's been struggling. Like, look at them. Like, whoa, it's well off its peak. Peak was 67. Now it's 30. It's 50% plus off its highs. So, Jack in the Box is at an all-time low. Krispy Kreme is at an all-time low. These restaurant stocks are getting crushed. So I'd be a bit careful just with the industry right now. But I would pick McDonald's. McDonald's is my favorite one. Yum Brands too. What do you think of SoundHound? Yeah, this is an AI audio subscription company where companies want to recreate your own voice in AI where you don't have to say it anymore. It just has an AI bot talk just like your voice. But here's the thing. This is what I like about this company. This is a subscription model company. 80% of the revenue comes from their subscription service, and check out the growth. Like 2023, big nothing burger, trash, no revenue. But now, 33 million this quarter, up from 19 million, up from 400K. Like, that annualized is crazy. That's 120 mil of revenue a year. That beat expectations. Or last quarter specifically, they expected 32 mil. They reported 42. They beat on this quarter. They missed on net income and they missed on EBITDA by double. Wow, that's actually bad. They lost a lot of money. Yeah, they 100 mil. They probably diluted you too. Yeah, they diluted you by 100 mil this quarter. I like the growth there, but it's a tough one. I don't really think they have a moat. It's just like, I don't know. I'd be careful with them. Hey, Papa Dan, what up, homie? Good to see you, dude. Thanks for the gold boxing gloves. No way. I appreciate that. Hey, what up, Brandon? He says, what is up with Webull? Hey, I actually just bought some Webull stock. They reported earnings yesterday. They're down 2.2% on the day, but yeah, we bought a few shares. Again, I wouldn't have Webull as a meaningful size position yet, but this is a stock I think it's worth owning a couple of shares in. Hey, look at the Iron Mountain. Iron Mountain's finally having a sympathy recovery. HCA Healthcare, new all-time highs, one of my new favorite hidden gems. Let's see. Yeah, here's our main portfolio up 1.7%. Finally getting a break from yesterday's madness. Yesterday was awful. Like, our portfolio tanked. How's our Webull portfolio doing? We're up 0.8% on the day. Hey, Pfizer's now up 4%. Yeah. All right. Let's see here. Hey, what up, Truing? Let's see here. Palantir is not a moral stock. So Palantir, people say that some people don't buy Palantir because of ethics, because Palantir is the company that gives the government, and they also work with ICE, which I don't even know if I can say that and not get taken down. But I don't want to get into it because if I stream randomly gets taken down. But yeah, they're helping out police stations, ICE, military. But if we go to their government contract revenue, this is why Palantir is such a growth monster. If we go to their government revenue, it is insanely growthy. The revenue's up 55, after grew 33, after grew 12. So the growth rate is growing on the government revenue. And this is the crazy part. If we go to their commercial side, This is nuts. Their sales are up 73% year over year. After grew 30, after grew 31. So just insane growth, beating on every expectation every quarter, printing net income with an absolute fortress balance sheet. No debt at all, lots of cash earning interest, making free cash flow, expanding margins. So, but extremely overvalued. Like even after this little dip Palantir's had, they're trading at 207 times next year's net income. So, a little bit of a tough one. Good call on CEG over Oklo. Yeah, Oklo is a complete startup junk. We, I didn't have the balls. Well, I did paper short it on but Oklo is not one I'd touch. If you want to get a real nuclear name, the best nuclear name of all time, I've always recommended ticker symbol CEG. It's the largest pure play for nuclear energy. They literally own 30% plus of all the U.S.'s nuclear reactors. There is no close second. Oklo, SMR, NNE. These are all these small modular reactor startups. If you didn't know, there's actually only 2 working SMRs in the world, and none of them are in the U.S. They plan that the first SMR in the U.S. will come online in 2030. So there's a lot of speculation around Oklo, NNE. Just kind of stay away from those. Okay. Which one should we do here? Thinking of selling SE. What do you think? So, least conviction on my part. Let's check it out. EU defense companies are interesting. Hey, if you got a ticker symbol for me, we can check it out. I know there's like Kongsberg. I think that's a big one. But yeah, here's C. I think this is like a e-commerce. Let's check this out. So e-commerce revenue up 35% year over year, led by Shopee's market leadership in Southeast Asia and Brazil. Digital finance service revenue increased 60%, though higher credit provisions pressured operating margins. Digital entertainment bookings grew 51%, boosted by Free Fire's collaboration with Naruto. Operating cash flow declined sequentially. Well, let's see. It's slightly up. Well, actually, let me just go look at their numbers right here. So the revenue is up 38% year over year. That's good growth. So the sales are up 38, and they made 144 million net income or it's up 144% year over year. They really made 400 million net income. That's after they paid a bunch of taxes. So, yeah, I like this margin expansion. They're kind of like in the Amazon phase. It's kind of like a Southeast Asia version of Amazon. And they're also, I don't know what's the forward PE on this company? 37. Interesting. Actually, I don't know if I'd sell out of them. Maybe a trim, but I don't know. Still seems pretty good. I like those numbers over there. No, those numbers aren't worrying me. Like from a financial point of view, it's not scaring me out. You can still totally sell it if you're like, hey, I think I'm going to get a better yearly return switching this money from this stock to another stock. I've been thinking about doing that sometimes. I've done that before many times. For my age, should I really own Pfizer that has a 7% dividend yield? So maybe one day I'll sell out of Pfizer and kind of switch it into another name I think will have higher growth. So let's go check out this other company right here, RZLV. So this one I don't love. I haven't. There's nothing too good here. Let's go look at their numbers though. If we look at the market cap, the whole company is worth 960 mil. So 960 mil market cap. That's very tiny. Let's go check out their revenue right now. So this is in half. Wait, is this a U.S. company? So this company is headquartered in Greater London. So it's not a U.S. listed stock. So that's why they report in halves. It says 2025 H1. That's because they report weird because they're not a U.S. company. But look at the expectations. This is what's really impressive. 20 mil of revenue. Are they going to make EP or EBIT? So they're going to lose 10 mil a quarter. Market cap of. They were able to dilute and fortify their balance sheet. I don't know. Nothing's really blowing me away here, to be honest. Yeah, I wouldn't own that with anything meaningful. I'd maybe nibble on them, but it's like a super, super, super small position, but I would not own that meaningfully. It's like those numbers didn't look too impressive. Is this dip ever going to end? Hey, what up, Mitchell? Rain Metal is making tanks again. Should we check that one out? Coriev has been on sale. Hey, what up, Casey? What app is this? Hey, what up, Zachary? By the way, yeah, this is actually a software where you buy stocks on a brokerage. If you want to get this brokerage I'm on, it's in the link tree in my bio, that very first link there. Broker called Moomoo. Okay, so someone said CoreWeave. You know who owns CoreWeave? That would be NVIDIA. NVIDIA is their largest, or if we go to the NVIDIA portfolio right here, their largest holding is CoreWeave, then APLD, then ARM, then Nebius. But if you go to CoreWeave right here, obviously this one's been struggling. On their earnings report day right here, they actually lowered their guidance because they couldn't get enough workers to actually complete and like build their data centers. But this is what's super impressive. Revenue growth was fueled by large contracts, including a $14 billion deal with Meta and a $6.5 billion expansion to the contract with OpenAI. But check this out: their quarterly, their contracted backlog nearly doubled quarter over quarter to $55 billion backlog. That's insane. But yeah, number 3 here, operating margins were below expectations at only a 4%, impacted by delays in third-party data center deployments. And I was looking more into that. But what I love about Core specifically is how growthy they are. I mean, check out the revenue. It's 1.36 billion, up from 580 million. So the growth is insane. 1.36 billion of revenue. And check out what analysts are expecting in 2 quarters. They're expecting 2.3 billion. I mean, the growth is just insane. I guess EBITDA is supposed to rocket up to 400 million as well, but still lose about 300 million net income a quarter. I want to see them get profitable, but that backlog is insane, and they got some good partnerships. Yeah, hey, again, someone said, what app is this? Yeah, hey, if you want to get this brokerage I'm on, it's where you buy stocks on. It's in the link tree in my bio, very first link there, broker called Moomoo. Webull earnings take. We just looked at Webull. If you give me a little bit, we'll check them out. But yeah, actually, I even bought some more Webull today. I bought some after earnings and then some more after earnings. So yeah, we did buy some Webull. Again, as much as I love Webull, I wouldn't have it as a huge size position, but I was super, super, super happy with Webull earnings. Wow, the market is having a great day. Well, happy Friday, everyone. Okay, so what do you think of Supermicro? I don't like Supermicro, and I'm a shareholder of Supermicro too. I've been so disappointed with them. Awful numbers. I think they're probably going to go lower, sadly. Not a great company anymore. They just sell a commodity. Margins have collapsed. The growth is gone. Well, here, let me just say the numbers for yourself. Here's why I would not buy the dip on Supermicro. All right, so I just wouldn't have it as a huge size position. And I say that as a sad shareholder. They've just disappointed me. If we go to the sales right here, the revenue's up, revenue is down 15%. So the sales, the lifeblood of the company, the revenue's down 15, and the net income is down by 60. So what does that mean in English? That means their margins have collapsed. Legit low single-digit margins, and this is real too. They're giving customers bulk deals and seeing increased competition from Dell where they just can't raise prices. So they used to have a respectable 8-10% margin normal commodity, but now it's 2-3. It's so, but the PE is cheap. It's that's reflected in how bad the stock is done. Same price that it was in 2023, but yeah, they're the company that installs the server racks and chips for you. So, but yeah, I'm a shareholder of them. I would keep it as a super, super small position. I don't think I'd buy more of them. Yeah, hey, super micro dip of doom. Okay. Why is the market up right now? Yeah, hey, I don't know, just like a little healthy retrace. This is great news. Hey, let's check out EVLV. Let's check out this one. What up, JV? EVLV. Good day, Nathan. Hey, what up, Shark? Good to see you, homie. Yeah, we'll check out Main Street Capital. That is my favorite monthly paying dividend stock. So here's Evolve Technology. Yeah, it's $1 billion company. So they're worth exactly $1 billion. Let's go check out if that's a fair multiple. So that's good growth. Sales are up 56%, after grew 37, after grew 20. So they're on a streak of growth. That's nearly 200 million of revenue a year. And they really have narrowed their losses the past 3 quarters. So they're only losing like 5 to 10 mil of net income a quarter. Let's see, cash from operations, 3 mil. Yeah, they just bought a company, I think. It says they spent 39 million on something. They also diluted you by 30 million to buy it. So they did some sort of acquisition. That's probably what led to some of that growth as well. I'd be careful. Gross margins down. What does this company do? I mean, check out their website. Advanced security detection. This detection right here. I don't know if I can say that. Oh, so look at this. A win for school safety, New Mexico. So this must be, I can't say the word, but like a pew safety. Look at this. I can't. I'm going to get taken. If the stream randomly gets taken down, it's because we were covering that sector. Please don't. Okay. Let's look at Main Street Capital. This is one of my favorite monthly paying dividend stocks because not only do they have a good dividend, but they've also had some decent stock price appreciation. And this company literally has to, by law, pay out 90% of their taxable income in the form of a dividend. So if we go over here to their monthly dividend, they pay you 26 cents every month. And actually, to keep up with that 90% payout rule to avoid paying taxes, they do frequent special dividends as well. So that's what's crazy. And here's how we can tell they can easily afford the dividend. If we go to their net income right here, it did fall 0.27, but I'm super happy with this. They're making easily, we'll just call it 120 million net income a quarter. I think that's a generous net income average. So 120 million of net income a quarter. If we go to the cost of the dividend, okay, here it is. The dividend cost $85 million a quarter, so they can easily afford the dividend and afford to do these special dividends. So Main Street Capital does, in my opinion, have a safe and sustainable monthly paying dividend yield. There's a lot of bad BDC. My other favorite BDC would be ARCC. There's also Blue Owl, but there's a lot of junk BDCs. Actually, if you just want to buy the whole BDC industry, you can buy ticker symbol BIZD. And if we just go to the whole industry, you could see that in the long run, these BDCs really don't outperform. This is the whole BDC ETF by market cap weighting, and but you get the crazy yield. Who cares if you get a 12% dividend? So, all right, let's see here. Let's look at, I'm going to keep them on the watch list. Hey, nice. PSECs, unfortunately, are really one of the worser BDCs. Or here's another BDC. They're just like Main Street Capital, but dang, this one's at an all-time low today. Let's go see if we can figure out why. We just saw Main Street Capital the last stock we looked at was making consistently 100 million in net income a quarter. Well, here's this one. Looking at these numbers, it's just so choppy. It's hard to trust this, really. How's the revenue doing? So the lifeblood of the company, the revenue is down 19 after it fell 16, and they're not making any money. So it kind of explains why this stock is at an all-time low and why Main Street Capital does so well. It's really just the financials of the companies. And that's why we always look at financials, because it explains the stock price of a company in the long run. It explains why Lucid's at an all-time low and Palantir's Apple's at an all-time high. What app is this? Yeah, hey, what up? This is actually a software brokerage. If you want to get it, it's in the link tree in my bio, that very first link there, a broker called Moomoo. Actually, all these are brokerages. They ask you for a bunch of information where it's all, they send you a tax form and stuff. All these do. But this one's my favorite right here. Very first link in the link tree in my bio. Completely free, cost nothing, no commissions. So, all right. Sony, hey, that's actually a Japanese company. Sony, PlayStation. They have a lot of businesses. Like they have the Sony music business. But yeah, actually the Japanese index actually is at an all-time high right now, finally recovering from the dot-com bub. But check this out. Here's Sony right here. Unit sale of key products. Yeah, PlayStation unit sales, 3.9 mil. Full game software sales, recorded music revenue. But anyway, yeah, game and network services, which is Sony, or the PlayStation is, oh wait, hold on. That says 1.1 trillion. We're looking at Japanese yen. So again, Japanese company, we're going to convert the currency to USD just to get a better understanding. But yeah, game and networking, 35%, imaging, sensing solutions, entertainment technology, music, Sony Pictures. Well, let's just go look at the total revenue when we combine all those industries. So all those businesses combined, the revenue grew just 1.55% year over year. So that's not great growth, but this net income is really impressive. Easily 1 to 2.5 billion of after-tax net income every single quarter, and you get a 0.5% dividend. They raise the dividend every year faster than inflation. So they're really interesting, actually. They do make good net income. So yeah. All right. Out of APLD, QETS, which one do you think is most sustainable? Probably either APLD or NBIS. Those are the only two out of those that I own, or I would own. I don't own any of those, but two of those are owned by NVIDIA. If we go to the NVIDIA portfolio right here, their second largest holding is APLD, and then Nebius. Actually, out of all those, and I still wouldn't own this one, or not yet, but I out of all those, I'd pick Nebius. Oh, hey, this is a good sign. Jim Cramer warns investors to stay away from Nebius. But yeah, these are the They got a $17 billion contract with Microsoft. So Microsoft, part of their Azure cloud is now going to be on this company's data centers. But yeah, look at the short interest. It's had a 10%. So 10% of all the shares are being shorted right now. What I love about Nebula specifically, again, I wouldn't just own a stock just because NVIDIA does. Always go do your own research on it. What I love about this is how growthy the revenue is and how it's going to continue to be growthy. If you look at the revenue, we're from 32 mil to 150 million year over year, a 4x increase. And if we check out what the analysts are expecting, they're expecting 500 million in 2 quarters. And the EBITDA, they're losing 100 mil a quarter right now, is expected to narrow to only 39 million. So again, they're still far away from profitability, but I like the growth there. But I wouldn't, again, as much as I love them, I would not have that as like a big size position. I'd have it as a real small position. Hey, what up, Ken? Good to see you. Would you have a big position in HCA? Absolutely. Not right now, not yet, just because it's probably at an all-time high right now, this stock right here. But out of all the stocks I've like literally ever analyzed, like this is legit, might be the best stock fundamentally in terms of financials I've ever analyzed. Should we look at it real quick if anyone's curious? It's at an all-time high today. I'm only up 5% on them. But you guys won't believe this. And I didn't mind. And even right now, the forward PE is a 17. 17 forward PE, very fair. But check this out. The dividend cost 72 cents of EPS, and the EPS was $6.90, and the free cash flow per share was 19. But here's another better way to look at it. By the way, unethical company is a for-profit hospital. But check this out. The revenue is up 9.5. So sales are up 9.5. The net income is up by 28, which means they expanded net margin. So net margin grew 18% year over year. So the net income is up by 28, but the EPS or net income per share is up by 42. How is the EPS growth rate so much bigger than the net income growth rate? This right here, my friends, no one ever talks about this. This is the sole reason I bought this stock. Check out the bottom left right here. This is the total common shares outstanding. There's 229 million shares that exist. They've bought back 10% of the company. There's 229 million shares. Same time last year, there was 250 million. Then there was 275. Then there was 313. Then 390. They've bought back 40% of the company just since 2019. And they pay a dividend. Again, remember, we just saw they made 1.9 billion in net income this quarter. The dividend cost 166 mil. The cost of the dividend went down from 180 to 166 because they bought back so much of their own shares. Whenever a company buys back their own shares, it makes the EPS go higher, makes the PE ratio go down, makes the cost of the dividend go down, and it basically just forces the stock to go up. If you look at the bottom here, they legit they put so much money in share buybacks. They spend $2 billion a quarter basically on share buybacks. They never dilute you, and they can easily afford to do it too. They're making $2 billion net income a quarter and like $3 billion of free cash flow a quarter. So that's why I bought HCA stock. I think they are the kind of company that's not just going to keep up with the S&P 500, but outperform the S&P 500. So yeah. Okay, how much longer are you going to be live? We'll probably be live for another hour. What's up? Hey, by the way, if y'all want to hit the follow button, we stream every single day. I literally sell nothing. I have no course, book, WhatsApp, Telegram. I'll never follow you, DM you, nothing like that. We just look at stocks. So let's see, Circle. Let's do Circle right here. This is actually the stablecoin company. So if you've heard of USDC before, this is the company that literally owns USDC. Let me see what the earnings hub is. So reserve revenue increased 66% year over year. Supported by a 100% increase in USDC circulation and stablecoin market share, 29%. So literally this company has a 29% stablecoin market share. But obviously we all know USDC profitability improved with net profit margins rising to 30%. No way. Was that real? Let's go see. So wow, that growth is good. Sales are up 65%. So they did 740 mil of revenue, and they made 70. They didn't make 200 million of net income this quarter, but they really did make 70 million of net income this quarter. Again, that last quarter, it says they lost 500 mil. That was their IPO one-time expense. Don't worry about that. This business doesn't actually lose money. So Circle, I actually really liked them. What's the forward PE? 70. Ooh, so probably still could have a leg down to go, but I put them on the watch list. They're definitely one of the better crypto. I like the stablecoin industry, and there's like favorable regulation around it recently. What app is this? Yeah, hey, by the way, this is a broker where you buy stocks on. If you want to get this brokerage, it's in the link tree in my bio, very first link there. Full disclosure, it's an affiliate link, so if you go and deposit $100, we'll both get like some free stocks. But and a lot of people like to just keep your idle cash in here. Free brokerage costs nothing, no commissions. It's my favorite one. By the way, all link tree in my bio, affiliate link to Weeble. So, but yeah, let's see here. Insider trading. This guy lives at. What's up, Clorox? Hopefully okay, we're good. Have you done Meta yet? We actually have not looked at Meta. Let's go over Meta real quick. I love this company. If you have the intention like me to legit never sell Meta, it is worth buying right now. Like it's year to date, it's 0.3 up. Like not financial advice. This is one to just diamond hand. Should keep. I think it's going to keep up, if not outperform the S&P 500 in the long run. The risk reward looks really good. The forward PE is a 20. They literally trade at 20 times next year's net income. Why are we looking at next year's net income multiple? Because if we go to the right now net income, the net income fell 82% year over year, which made, of course, the EPS fall 82% year over year. That's actually because of a one-time adjustment. They had a $15 billion tax charge one-time off. So if we go to the operating profit, which excludes this one-time adjustment, it was a record quarter. Record sales, first ever $50 billion revenue quarter, record Q3 profits. But one thing investors are questioning is how much Meta is spending on AI and CapEx and data centers and chips. Like look at the bottom, they're spending now 20 to 25 billion of net income a quarter on new assets, on chips, mostly chips and stuff and AI. But they're being questioned if they can get real returns from it. And I'm honestly okay with it. Meta can easily afford to do it. I love this company. They have their Meta Ray-Ban glasses. They now have a huge stake in Ray-Bans. Yeah, ESLOY, I think is the ticker symbol. Yeah, Meta, I think it was on this day right here. Meta took a huge stake into this stock. They own like 5% of it, 5% of a $160 billion company. But this is the company that owns Ray-Bans and Oakley, and they're partnering to make the Ray-Ban Oakley. Meta also owns Threads, has now the same amount of daily active users as X, introducing ads to WhatsApp. I really like Meta. I have so much to say about them, but I'll probably bore everyone. Okay. How do you compare HCA to UNH? Yeah, UNH come two completely different business models. This is like your insurer. HCA actually runs hospitals. And I kid you not, HCA Healthcare has the #1 hospitals in the world. Like in terms of success rate of surgeries, the best everything. They're a for-profit hospital. That's why, not a government-run one. But anywho, this is your hospital play right here. And I love them. Literally best financials ever. What is the app you're using? Yeah, hey, what up, Nana? This is actually a broker right here where you buy stocks on. It's a software. It's in the link tree in my bio. That very first link there, a broker called Moomoo. Yeah, okay. Let's see. What do you think of Primo Brands water? Wait, water? I've not heard of Primo Brands before. Yikes. Unfortunately, whoa, this stock is the same price that it was in 2016. So if you bought the stock in 2016, you're down on your position. Diversified offerings. Let's check out their website then. Maybe they own Mountain Valley, it looks like. So they sell like spring water. Okay, interesting. A commodity. Let's go check out their numbers because that's what really matters here. So if we go to the sales, the revenue, actually this is good. The revenue's up 35% year over year. So the revenue's up 35 and the net income is really low for some reason. That's a little odd. Maybe it's the leverage. Yeah, like that's not good net income. It says it's down 68, down 50, down 14. So it looks like something's happening to their margins. Yeah, we can see like the analysts are expecting every quarter EPS of 28, 40, 35, 20, but the EPS is way down here. And the EBITDA as well. Maybe it's because of those misses on expectations. I don't know. I'd be careful with this one. Nothing's really blowing me away there. What's the yield on this one? 2.55% dividend. They might, I don't know about that. I'd just be careful with them. Looks like a water play or something. BULL posted good earnings, but the stock dropped. Yeah, let's look at bull stock again. So I'll be quick about this one. Hey, shout out to the homie Northern Jays. No way, dude. Thanks for the little gift there. Yo, if you got a stock you want me to look at, let me know there, Northern. Yeah, here's Weeble right here. It's hard to see, or actually it's down here now. If we go to the revenue, this is great. The revenue's up 55%. That's great growth. So revenue's up 55, and they made 36 mil of net income. We annualize that. I did this math yesterday. It's 125 mil in net income a year, which is a 33x forward PE. So in terms of my generous forward multiple, they're trading at 33 times net income in about a year, which is still a little expensive. So that being said, Webull is probably fairly priced where it is right now, and that's why I'm okay with that. I've actually been buying. I bought Webull today. I bought some yesterday. I bought some right after they reported earnings when they were flat, and I bought some this morning right before the stream. And again, as much as I love this company, I only got 50 shares and it's a $400 position. But it's a company I want to own, but not as a major size position. Kind of like an InnoData as well. I love InnoData, phenomenal fundamentals, but I don't really want it as more than like a $500 position. Cormatics as well. I don't really want this over $1,000 position. As much as I believe it's a 3x, I can't trust too much money in it. All right, but it's still worth owning. So yeah, let's see here. I bought it 608 and 660. I think I bought Meta higher. Here, actually, if we go to Meta right here, you can see my exact history. I love being fully transparent. If anyone has any questions for me, let me know. Yeah, look at that. We bought a share of Meta at 644. It's 592. So we've definitely messed up some of our buys, but we did buy some Meta at a real good price down here. Look, we've been diamond handing Meta. I've been holding this stock since, these are all the dividends for well over a year and a half. Since June 2026 is when I had my first Meta shares. All right. What do you think of quantum stocks? Yeah, a lot of the quantum stocks are junk. But the best quantum plays are Honeywell, Google, Microsoft, and IBM. I would stay away from like the qubits and some of those. Thoughts on day trading? Yeah. Hey, Jerome, what's up, dude? If you're good at it, then good. But me personally, I don't really recommend day trading. It's all about timing. You don't really look at financials, and that's just not what I'm good at. I've tried it before. I haven't made any money. But what I found is if you literally just buy and hold, just diamond hand, high quality growthy stocks, you can get better returns usually, or if you do, you can get better returns than those option traders. Like here's this account right here. Year to date, we're up 60%. We were doing just as bad. We were down 16, but now we're up 60% year to date. All time we're up 145% versus the S&P only up 52%. And that's literally just from my boring. I've never done a single option or crypto in this portfolio ever. Literally, I've just buy and held stocks. So yeah, I'd like to if anything, I would swing trade, buy a stock and sell it within a couple of weeks or months. I wouldn't do stuff in like the same day. What should I be investing in right now? Well, hey, not financial advice. First off, you want to have the backbone of your portfolio. Like most retail investors and most hedge funds, matter of fact, cannot beat the S&P 500's 8 to 10% yearly CAGR. And I promise, I've been there. I've definitely underperformed like in this portfolio. We're only up 8% all the time. I would have been way better off in the S&P 500. Have the backbone of your portfolio in the S&P 500. And then after that, buy some individual names in the S&P 500 that you like. Like Apple, Nvidia, Microsoft, Amazon, Google, Meta, Berkshire Hathaway, whatever you like. And actually, every stock in here is in the S&P 500. I own a lot of individual S&P 500 names. Meta, United Rentals, Google, CEG, Amazon, AMD, Robinhood, SoFi, Reddit, Disney. So I own a lot of S&P 500 names. And hey, shout out to Northern Jays. Let's do Rich Tech Robotics here. Hey, no way, Maddie on the YouTube stream. No way, dude, with this 25 run super chat. Yo, thanks, Maddie. I appreciate that. If you got a stock you want me to look at, let me know. Yeah, I need some coffee. Actually, I had some coffee before the stream, and I got water here. Yeah, here's Rich Tech Robotics. Not a stock I like. Like if you're looking for a real robotics, quality robotics company, this is not the one you'd want to diamond hand. It's just kind of like a startup with no patents, no IP, with just some speculative NVIDIA partnership. But if we go to the revenue is at negative 18% year over year, and the revenue is only $1 million a quarter. That's why I can't trust Rich Tech Robotics. The revenue is literally $1 million a quarter. It used to be much more than that, So the revenues have gone down. They're losing a bunch every quarter. I guess the analysts are expecting 2.3 million in 2 quarters, but Nothing, not a good robotics play in my opinion to buy never. So it could be certainly a fun momentum swing trade because that one has a lot of volatility, high short interest. But if you're looking for, in my opinion, the best robotics play besides Amazon, Amazon is the best robotics play by far. It would actually be Symbiotic, and they're also on a dip, on a similar dip like Rich Tech Robotics. If I was going to buy one on a dip, I'd buy this one. If you're wondering what is Symbiotic, what does this company do? And I think they just reported earnings today. Whoa, big beat on revenue, a little miss on net income and EBITDA, but that's no big deal if that really is a big revenue beat. But this is Symbiotic. They're the number one warehouse robotics company that actually helps out Walmart with their warehouse logistics. And actually, Walmart loved them so much that if you go to the shareholders, Walmart is the second largest shareholder. Walmart owns 13.5% of all the shares. And what I love about we just looked at Rich Tech Robotics. There was no revenue growth. The revenue was negative 18% year over year. But here's Symbiotic. They have real growth. They have over 1,500 registered IP and patents. Check this out. The sales are up 25. After grew 50. After grew 77. After grew 34. Like they're on a streak of growth. And this beat, that top line beat is incredible. But there was a bit of a miss on the bottom line. So I would check them. I would certainly put them on the watch list. Yeah, if you got in their stock, you want to look at Northern Jays, let me know. I got you. Kind of didn't have anything good to say about that one. But about Webull an hour ago, I'm up. Hey, heck yeah, Miller's awesome. Again, none of this is financial advice. Don't listen to me, but I wouldn't have Webull as a super, super large position yet. I think they're honestly, it's like a fair value. Like they're trading at 40 times next year's net income at right now's price in my eyes. So I think it could do a little leg down. So that's why it's definitely worth owning right now. It's worth owning a little bit right now. It's worth nibbling now. That's why I got 50 shares, $400. But I'm going to buy more once it falls more. If it falls more, I hope honestly, if it doesn't, then that's a thing. I don't care if it doesn't because I can just let this grow. So, okay. Do you like DYU, the 3X Granite Long? Yeah, hey, I'd be very careful with the 3X companies. Those always trend to zero. Like actually, if we go to the triple or like SQQQ, I think, again, just from how math works, because the NASDAQ isn't doing this, these always spiral permanently down to zero. So yeah, look at that. Because of all the stock splits, it used to be like a 1.3 mil. Okay. But you get in and out of those. You swing trade those. Yeah, hey, try not to spam in the chat there. Yeah, we'll try and get to all these stocks here. Okay. Steven said RCAT. Let's check out that one. That's actually a drone government play. They actually were able to raise their prices on the gov. Oh, wait, no. I'm thinking of Kratos. This is Red Cat. This is a drone play. Let's see what this has to say. Revenue of 10 million. The company expanded U.S. Army contracts to 35 million, launched Blue Ops Maritime Division, secured NATO catalog approval for Black Widow drone system. Well, let's check out the revenue down here. So revenue was 9.6 million. So yeah, check this out. If we zoom out to last quarter, the sales were terrible. 3 million, 1 million. Well, look at what analysts are expecting in 2 quarters. They're expecting the revenue to be 24 million that quarter. That annualizes 100 million of revenue a year, still expected to lose net income, but they're selling these Black Widow drones to NATO. Fortress balance sheet, probably from diluting you. Let's see. Yeah, they diluted you by 160 mil this quarter, but I don't blame them because of how good the stock has been doing. And actually, this happens all the time. They dilute you when the stock is doing great, and then it causes the stock to go down. But it fortifies their balance sheet. I don't blame them for that because 700 mil market cap. Again, I wouldn't probably have this as a major size position. 206 million of cash. Think about that. 206 million of cash, and the whole company is worth 740 million. So a good chunk of their market cap is just in cash, but they just diluted you by a good chunk, which is going to permanently put a huge strain on the EPS in the future. Interesting. I wouldn't have it as a major size position. Is BTC a buy? Hey, maybe. I don't know. TQQQ. So SQQQ and TQQQ. Actually, you're right. TQQQ has actually done really good. We were just looking at this one. What we've noticed is it's kind of rhymed together. Bitcoin is like a triple beta NASDAQ, or it's kind of done that historically and kind of rhymes together. Yeah, you're right. That's the TQQQ. This is another one. It's a 3X leverage ETF. Okay. What's this one? FISV. Yeah, Serve. That's another one I don't really love. Kind of super small, small cap robotics company, like a rich tech that doesn't. I'd rather buy Symbiotic or Amazon over Serve. So let's check out this one. What up, Skeet? He said FISV. So this is Fiserv. So they literally do like 40,000 transaction a day or something. But like with a bunch of restaurants and businesses, yeah, hey, we'll try and get to SoFi. Hey, yeah, try not to spam there. What app are you using? Yeah, hey, again, this is brokerage. If you want to get this app I'm on, it's in the link tree in my bio, very first link there. But check this out. This was really bad. And it kind of makes sense why they gapped down. And to be honest with you, the sad part is it's probably fair. They're at a fair price to the point where they might actually go lower. But check this out right here. The analysts expected 5.34 billion in revenue. They only did 4.9 billion in revenue. A big miss on revenue, a massive miss on EPS, and a massive miss on EBITDA. It really was a triple miss, like super weird, like terrible earnings. So if we look at their current valuation, this company trades at 10 times PE. Actually, the net income is expected to go down a little bit. So they're actually trading at 11 times next year's net income. That might be fair. 11 times net income for a company that its growth just like completely missed expectations and might go negative. So maybe I'd be careful with this one. But here's the interesting part. Again, they trade at 11 times net income. They still make great net income. Easily like 500 to a billion of after-tax net income every quarter. Oh yeah, the operating profit fell 16%. So sales are only up 0.9, doesn't beat inflation. Yeah. All right. Okay, let's check out. Okay, what was one? SoFi. All right, let's do SoFi right here. Then we can look at TNDM and some of these other names like HIMS. So here's SoFi right here, fintech. Hey, they're green on the day now. I do own SoFi, full disclosure. So I do. That's actually one of my biggest regrets. I regret every share I've ever sold a SoFi. I regret every share I've ever sold a Robinhood too. We sold. I won't get into that, but SoFi. Actually, I think they just introduced crypto. There was some weekly news. Yeah, SoFi Technologies becomes the first U.S. chartered bank to launch crypto trading. If you didn't know, SoFi actually has their own banking charter, which are notoriously impossible to get. They got their banking charter through a loophole that's literally patched because of SoFi. Pretty crazy, but check this out. If you go to their financial service business specifically, this is crazy. This is what justifies their high multiple. The sales are up 76%, after grew 101%, after grew 140, after grew 280, after grew 290. It just hits a new record every year, every quarter. And not just their financial services, but also like their lending revenues at a new record. Nearly 500 mil. It's never even been close to that before, but it's up 25% year over year. And here's the actual analyst expectations. They beat on revenue, they beat on EPS, and they beat on EBITDA every single quarter. So no wonder this company has a high multiple, and it's had so much momentum. Like, people are really starting to take SoFi serious. So that's why I certainly would not be selling out of SoFi on the dip. If any, this is a great. I think this is a great growth stock to just, like someone said, to just diamond hand that one. Right now's valuation isn't great. 67 times next year's net income on SoFi. Again, they deserve a high multiple for sure. We were buying SoFi I remember it was like before earnings day, like way back here. And there's our little buy orders on SoFi. But yeah, we've been just literally been diamond handing. All right. Okay. Oh, dude, try not to spam there. Yeah, maybe we'll get to Rocket Lab. All right. Okay, TNDM. Let's check this one out. TNDM. What's this one? Tandem Diabetes. Oh yeah, this company. Hey, they're up 10% on the day. Let's go. Actually, a lot of healthcare stocks. But another one that's very similar to this is actually, I love this company. PODD. This is a phenomenal company, but yeah, this is some diabetes care company. Let's see. So yeah, their pump revenue and their supplies and others. So we just go to their total revenue down here. The revenue is up only 2% year over year. So the growth is really slowed down. The sales are up 2% and they're still losing, 20 to 50 mil in net income a quarter. That explains why before today, the stock has done so bad. Like how it's well off its $150 peak. They really have been missing on expectations. I'm assuming, or if we go to EPS right here. Yeah, dang. Especially 2 quarters ago. And we can't even see it before that. But what's the forward PE? Oh, so there is no forward PE because they're expected to still lose net income for the next year. I'd be careful with this name. We kind of would want to see the growth come back and the net income come positive. but they're doing great today. That's the good news. I wouldn't have it as a crazy big position, but they certainly are interesting. Funny said Arista. Hey, what's the Arista Networks? Is that ANET or what? Give me the ticker symbol. Oh, okay. Yeah, we found it. Okay, so yeah, if you guys got a stock you want to look at, give me the ticker symbol. We'll check it out. Arista Networks gains momentum following NVIDIA's networking revenue surge. Microsoft selects Arista Network for AI superfactory infrastructure. So hey, you basically world's largest company, Microsoft chooses Arista Networks. That's a good partnership. But check this out. If you go to their product revenue right here, this is great. Sales are up 25 after grew 18, after grew 27. So their product revenue is at a record, and also their service revenue that is up 38% year over year. That's a better growth rate. 80% of the revenue comes from the US. And yeah, they're beating on expectations every quarter, beat on revenue, beat on EPS, beat on EBITDA. And this net income is honestly the best part. Like they are making easily 800 to 900 million of after-tax net income a quarter. Yeah, that's after they paid over 100 million of 120 million of taxes. That's after that. So this is incredible. And at this growth rate, they're going to be making $1 billion in net income a quarter. What about the free cash flow? Let's see that. FCF did over $1 billion of free cash flow a quarter. Really good balance sheet. So they're a quality name. How do I get there on Moomoo? By the way, I have a tutorial on how to use this brokerage. Yeah, if you want to get this brokerage I'm on, it's Moomoo. It's in the link tree in my bio. Very first link there. My favorite brokerage to actually analyze stocks. Also have a link in the link tree in my bio on how to use this app. I have all the details, but let's check out HIMS right here. This company, let's check out their earnings. What did they report? So the revenue grew 49% year over year, fueled by a 50% rise in online revenue and 21% subscriber growth. That's great news. 21% subscriber growth. They now have 2.47 million subscribers. The company completed a $258 million acquisition to expand into European markets and launched new hormonal health products while reducing GLP-1 treatment prices by up to 20%. Yeah, so that's one main reason why there's so much volatility on HIMS. One main reason HIMS has done so good before today is because they used to sell weight loss prescriptions, these GLP-1 subscriptions, for like $499 a month, or maybe it was $199. But anyway, Is this a pre-recording? No, hey, yeah, thanks. Yeah, this is not a pre-recording. What's up? Probably sound like AI though. But it's the future uncertainty. They used to sell Ozempic on their website. Literally, Novo Nordisk is Ozempic on their website. Then they ended their partnership with HIMS, and now they no longer sell a weight loss prescription on their website. But I don't know. And then they brought one back, but it's like with a different company, and the prices are way lower, so the margins they get are going to be way lower. Anywho, that's why if we go to the revenue, this is great. This is why this one's still super interesting. The sales are up 50% after grew 77%. Remember that there was a nice growth in subscribers. But if we go to the net income did actually fall to only 15 million when normally they're making 20 to 50 mil a quarter. So the margins did fall. Gross margins fell, net margins fell. And they also issued some debt, but that was no big deal because liabilities go up with assets. But they did that to buy this company. Yeah, they spent basically $900 million buying a company in an acquisition to expand their like testosterone products. Anyway, what app is this and what should I buy? Yeah, hey, Zach, again, if you want to get this app I'm on, it's in the link tree in my bio. Very first link there. Broker called Moomoo. Hey, Huckleberry, what up, dude? He says, what's up, bro? I'm down so much. What's happening to the market? Today's a pretty calm day compared to yesterday. But yeah, we were down bad yesterday. Let me go check out how the SPY is doing real quickly. So yeah, look at this. Actually, the QQQ new intraday high right now. So maybe go check back out your portfolio. But that's after yesterday's absolute gap down, monster gap down. But at least it's a happy Friday at least. We're up 1.8%. Actually, I bought the dip a little today and yesterday. All I've really bought in is a bit more Webull stock. I just really like the numbers on them. Oh, I bought more Iron Mountain, the smallest bit. But yeah. Okay, Trade Desk, this one, I wouldn't recommend them at this price. Sadly, I think they're probably going to fall maybe another 10, 15%. I think they deserve to be where they're at right now. They're seeing so much increased competition from Amazon and Roku. Literally, the trade desk used to have Netflix use the trade desk to find their advertisers, but Netflix literally switched from the trade desk to go to Amazon. But anyway, here's the thing. If we go to the company's PE ratio, this company trades at 45 times PE. It's okay to have a super high multiple as long as you're, really high growth. But I think some of the growth has slowed down from what the analysts were expecting. So the revenue's up 17. Net income, actually, here's the good news though. They're still making good net income every quarter, like 100 million net income, but the multiple is still really high. See, is there any Morningstar research on this company? Morningstar research. Most advertising dollars are rooted to ad giants. Firms like Google and Meta have no incentive to work with the trade desk. Well, actually, I don't care about that. Let's not look at that. When did they report earnings? Do we have anything about the earnings? So, okay, revenue growth is fueled by Kokai platform and CTV advertising expansion. Profitability increased 43% adjusted margins. Customer retention stayed above 95% for the 11th year. Honestly, it's not. This is still a good company, and I would put them on the watch list. They're a great TV advertising stock. I don't know. Honestly, the risk reward might be decent here. I don't know. I really don't know. 45 PE might still be a little too high. I logged in and I was like, oh, yeah. Hey, Todd, the homie Todd is here. What up, dude? He said Hood stock. Yo, we just bought Webull stock. I believe Webull is transitioning into Robinhood. And I am a Robinhood shareholder. I regret every share I've ever sold a Robinhood. And I'm super bullish on Robinhood right here. So, hey, we'll look at Ubisoft and some of these other names too. But yeah, here's Robinhood right here. This is what's crazy. If you go to the revenue down here, the revenue was 1.27 billion. It's up 100% after grew 36, after grew 30, but it was 1.27 billion of revenue. Out of this 1.27 billion of revenue, 560 million of that was net income. And that's after they paid 80 million of taxes. So that was real. So they really have a 44% net margin. How are the margins so high on Robinhood? That's because Robinhood, the app right here, that literally just in the past 6 months here, if we go here, they just added in this prediction. This prediction market stuff? And because whenever you go buy and sell a stock on a brokerage, they make like a fraction of a penny. But whenever you go do this prediction market stuff, they make a juice of a fee and a juice of a commission. And same with crypto. Whenever you go do crypto and prediction market stuff, that's where they make a juice of a commission. So yeah, they're printing net income on this. We can see their net cumulative funded accounts is at 26.8 versus 24.3. Same time last year. That's great. Everything in Robinhood's heading in the right direction. Great, never sell stock. Valuation still might be too high right here though. Okay, Ubisoft, is that UBI or so? Oh, this is an ADR. Wow, they're at an all-time low. This stock is at an all-time low. I don't even know if this is the right company. ADR. They're a European company, so we'll convert the currency from euros to USD. Addition, production, cloud gaming, publishing. How's the revenue? So the revenue's down 17% for the full year 2025 fiscal year 2025 versus fiscal 2024, and the net income is negative. Yeah, yikes. That's not good. What games do they own again? It's not going to tell me. Well, yeah, Ubisoft. I don't know about this one. All right. Yeah, they're at an all-time low, sadly. So I bought Aliens and US Prediction. Broadcom here. We'll do Broadcom right here. Broadcom's an interesting semiconductor name. Like most people know them for their semiconductor solutions and their TPUs, their tensor processing units, but actually they're a big infrastructure software company where they collect basically royalties. If you go to their infrastructure software right here, especially like annual basis, it rocketed up, or that's for full year 2024. Yeah, let me go back to quarterly. The growth has been utterly insane. I mean, it used to be like 2 billion a quarter. Now it's like 6.7 billion just this quarter. So if we scroll down here to the FCF, which stands for free cash flow, the free cash flow was $7 billion, up 46% year over year. They're easily making 4 to 5 billion net income every single quarter. Like they just print money. So I love Broadcom. What's the forward PE? A 61. So definitely expensive, but they definitely deserve a high multiple. You get a 0.7% yield, much higher dividend yield than NVIDIA. I also love Taiwan Semi. If you don't know what like semiconductor play to buy, you could actually buy the ticker symbol SMH ETF. Breaks your money up for you into all these semiconductor names by market cap weight. Athena, is it Google? Yeah, let's do Google. I love Google. You know, Warren Buffett, actually, let me show you that because this is really interesting. If we go to the Warren Buffett portfolio and we go to new positions, the only new stock that he's never previously owned, he bought Google this quarter. I couldn't believe it. And on that day, Google went up like 4%. That was like last week. But Buffett's finally buying it. You know, his rule is kind of, it's better to buy a quality company at a fair price than a fair company at a low price, or whatever the saying goes. Anyway, Google is that quality of a company to buy, never sell. They've pretty much beat OpenAI at their own game. Gemini 3.0 is already better than the best version of OpenAI, and they've integrated it better through all their apps. Even after all this hype, the valuation, after all this rally, the PE is a 29. So Google trades at 29 times PE. It's an ETF in one. They literally own YouTube. They own Android, the Google Play Store. They own the Google Cloud. They own Wiz. It's like they're an ETF in one. They own Waymo. They're in quantum chips, TPUs. Yeah, just the Google Cloud revenue is up 33. After grew 35. After grew 25. So they're just on a. This is another crazy part. They make legit 30 billion of after-tax net income a quarter. And what is Google doing with basically 30 billion net income a quarter? Well, check out the number at the top here. They spend, that's why the stock doesn't go down. And the buybacks they've done like years ago are so accretive to right now stock price, but they spend $15 billion a quarter solely buying back their own stock. And they also pay a dividend. The dividend only costs $2.5 billion. Again, they make $30 billion in one quarter. That pays for the entire year of dividends times 4. So they're going to slowly transition into a company that's doing 10 to 15 billion of buybacks a quarter to 10 to 15 billion in dividends a quarter. And that's why this is a great dividend growth stock, where in 10 years from now, your yield on cost, this will be like a Verizon or something. Or no, but I love Google. Totally biased. Yeah, I'm totally biased. I'm also a shareholder of Google. They're actually now my largest holding in my account. They grew to that way. We're up crazy on them. We're up 83% on Google. So, yeah, if you have the intention to never sell Google, I think it's even worth buying right now. All right, let's see here. What app was that? Oh, hey, Babua, hey, all these apps I'm using are all in the link tree in my bio. Not sure which one you're talking about. Yeah, all these are brokerages where you buy stocks on. They all send you a tax form. But this one I'm on right here is called Moomoo. It's in the link. This brokerage I'm on right now is in the link tree in my bio, the very first link there. It's free, costs nothing, no commissions. It's my favorite one to like analyze stocks, super investor tracker, all that. All right, let's see here. Hey, what up, John? He said, check out VUZI. Let's check out that one out. I haven't heard of that one, I don't think. So Vuzix. So a very small market cap. We don't really cover these. The whole company is worth $170 million. So the whole company's worth $170 million, and the stock is lower than it was in 2011. So if you bought the stock in 2011, you are down 80% on your shares. Let's go see if we can figure out what happened here. So if we go to revenue, revenue is $1 million a quarter. So, and it's down 16%. So they're doing $1 million of revenue a quarter. They're losing Oh, that's the tough part. So look at this. They're losing $7 million a quarter, which is about $30 million a year. The whole company is worth $170 million. So when you lose $30 million a year or $7 million a quarter, it's really devastating for the market cap. I can now kind of understand why that one's done so terrible. No revenue, $1 million a quarter, and they're losing a lot of money. I wouldn't own that one, or not with anything meaningfully. Oh yeah, my bad here. Let's get to Credo. Here's a really cool thing about Credo that I don't think people realize. One of the reasons their net income is so high is because this company is headquartered in the Marshall Islands and pays no taxes. This company does not pay taxes. They're not headquartered in the US or anything. They're headquartered in the Marshall Islands, basically the Cayman Islands. So they pay no taxes. Well, check this out. Do beware. 55% of the revenue comes from Hong Kong. 20% comes from China, and the US is only 15% of the revenue. But yeah, most of the revenue is China. But their numbers are so impressive, an insane beat on revenue. Analysts expected $190 million revenue. They did $223, Analysts expected 20 cents of EPS. They did 34. Beat on EBITDA. It was a triple beat quarter. Like sales are, this is nuts. The revenue's up 3x, and the net income was 60 mil on that with a monster balance sheet. Wait, let's see how much cash they got. They have $480 million of cash, and that cash is earning them interest of 4 million. They made 4 mil of interest just on their cash. Honestly, Kratos is interesting. Great financials. Really, really good numbers there. I'm in APLT. Hey, yeah, sorry, by the way, if I missed some of the stocks. I'm trying to get to all these. Wait, am I looking at, do you mean APLD or APLT? Yeah, this is a micro cap. I wouldn't really touch this one. If we look in the top right, the market cap, just beware of this. Like, I'm going to go analyze. I've never looked at this stock, but I'm guessing this is probably going to go to zero. If we remember this, the whole company is worth 37 million. Now, before we look at their numbers, let's just say we can buy the whole company. You could do that. You could buy the whole company for $38 million. Let's say you do it. We buy the whole company for $38 million. Wow, that sucks. You're buying a business that lost 20 mil, 20 mil, 20 mil. It says they made 40 mil this quarter. No, they didn't. They actually lost 33 mil in net income. So, wow, when you lose money, then the money has to come from somewhere. So their assets are just depleted. They now have more liabilities than assets. Dang, they diluted you by 100 million that one quarter. So yeah, this company is the kind of stock, sadly, to just continue to go lower and lower to zero. What app is this? Hey, what up, Limit? Yeah, by the way, this is a brokerage software where you buy stocks on. If you want to get this app I'm on, it's in the link tree in my bio, very first link there. It's an affiliate link too, full disclosure. So if you go and deposit $100, we'll both get some free stocks. But yeah, free brokerage, costs nothing. Marathon, please. This is sadly a Bitcoin mining company. And I'm not picking on Marathon. I've looked at every single Bitcoin mining company that exists. CleanSpark, Hut 8, Core Z, Hive, there's not a single Bitcoin mining company that has actually outperformed actual Bitcoin. So there's never a scenario where I'd ever recommend a Bitcoin mining company over actual Bitcoin. There's never been a Bitcoin mining company to ever outperform Bitcoin, not even come close to it. So I don't really see the value there. Okay. Carlos said AAP. Is that Advanced Auto Parts? Yo, AutoZone is definitely the better pick, but sadly, look, this stock is the same price that it was in 2010. Yo, try not to spam in chat there. Okay. Yeah, Advanced Auto Parts, they're the same prices they were back in 2010. Yikes. Let's see if we can figure out what happened here. So, revenue is, so this is bad. The lifeblood of the company, the revenue's down 5 after it fell 3, after it fell 16. So, yikes. Not good. Revenue's not good, and these are bad net income numbers. Looks like they lost 400 mil that one quarter. Now it was a real or actually they lost 500 mil, but the past 3 quarters, they did make 15 mil. They made 24 mil, 1 million. But sadly, it looks like I can totally understand why this stock has done so bad. It looks like a company that's lost all growth. It's in negative growth. Sales are going to decline mid-low single digits every year, and they're barely making any money. I mean, even before we exclude that one-time adjustment, even before that, the numbers have always kind of just been choppy here. Parts and batteries, yeah, just declines. Accessories and chemicals, just declines. It's a tough one. Not too quality there. O'Reilly's did, ORLY, they do, it's night and day, the difference between the two stock prices. Look at O'Reilly. They've been one of the best performance stocks in the whole S&P 500, and that's because of the share buybacks they do. And they actually make very good net income. Look at that. They're making $700 million net income a quarter. What is O'Reilly doing with $700 million net income a quarter since they don't pay a dividend? Well, they spend, this is the best part about O'Reilly and AutoZone, they have a rule where literally, instead of returning money to you via dividends, they return 50% plus of their excess net income via share buybacks, no matter what. So they legit do 500 million plus a share buybacks a quarter. And here's what that does for you as a shareholder. The net income is up by 9, but the net income per share is up by 12. Isn't that insane? It's because, again, the EPS growth rate and the net income growth rate should always be the exact same. Only thing that changes the EPS growth rate is the share part of the ratio, and the share part of the ratio went down a bunch. So anyway, I love O'Reilly. what was the app called? Yeah, hey, again, if you want to get this app, or it's actually a software brokerage where you buy stocks on, they ask for a bunch of information, send you a tax form. But if you're interested in buying and getting into stocks, this is my favorite software. It's in the link tree in my bio, very first link there, a broker called Moomoo. Completely free, no commissions, doesn't cost anything, no $5 monthly fee. Like I have Robinhood as well, but you want this 3.5% APY, they make you pay $5 a month. And I'm not doing that. That's why I like this app more. Cost nothing, no commissions, no monthly fees, and you get a 3.6% APY on your idle cash. And a lot of people just do it for the idle cash feature. Pretty cool. Anyway, let's keep going here. Hey, what up? Good time. Good to see you, homie. Do you think it's a good time to buy Credo? Honestly, it looks pretty decent. 19 with around 5K investing in VOO, VTI. What are your thoughts on the upcoming market? Yo, Andrew, dude, that's awesome, dude. You're a winner, man. He has 19 and 5K in the S&P 500 in NVIDIA. Yo, that's what's up, dude. Yeah, I think right now is a market where you kind of want to be a little bit cash heavy. Like valuations are a little high, so I think you want to cautiously dollar cost average right now. Today's a great Friday, though. Looks like the markets are having a nice little retrace from yesterday's big low. So let's see here. Could you look at BE, please? Yeah, nothing's really blowing me away with Bloom Energy. Or let's go check out their numbers because that's really what matters here. So they trade at 260 times next year's net income. So that's an expensive multiple, but let's go check out their numbers because that's what matters here. So this is what we want to see. So revenue increased significantly by 57% year over year, driven by operational efficiencies and cost reductions, resulting in EBIT exceeding estimates. That's great news. Gross margins improved by 5% due to better manufacturing enhancements, positive operating cash flow. So it looks like they had some really good earnings. Yeah. So this is starting to make sense now. If we go to what the analysts expected, that's the orange line. They beat on revenue, slight miss on net income, but a beat on EBITDA. So it was a good beat, I guess. Yeah, sales are up 57%. Looks like they lowered their costs, rose margins. So it looks like specifically their earnings were good. Yeah. Slide 17% after falling 15. Oh, I guess that was yesterday. Interesting. Actually, hold on. BE real quick. Bloom Energy. Maybe we can check out their website super quick. Oh, Hydrogen Energy. Let's see. Okay, yeah, no cookies for you, buddy. Okay. Fast, reliable power. Okay. Generates power on site, converting fuels like natural gas and hydrogen into electricity without combustion. Can be installed in 3 months. Okay. So yeah, some kind of energy modular company. Hopefully that was helpful. I don't know. Okay, let's check out. Ook said PBR. What's this one? This is PBR. Oh, this is that oil and gas stock. So you're basically buying this oil and gas company to maximize your dividend income. Because if we go to the stock, this stock is the same price that it was back in the year 2005. So you're not buying this stock to really outperform the tech-heavy S&P 500. You're buying it to maximize your dividend income, and you get. Oil does good whenever there's war fears, inflation fears, currency fears, whatever. Oil usually does good in those environments. So you're kind of buying it to maximize your dividend and for the diversification. Out of all the oil stocks, I don't love this one. I'd probably pick a Chevron, Exxon over this one. The yield is 14%, which is crazy. Actually, I own Murphy USA. Hey, they're up 1.7% of the day. That's my favorite oil and gas one. Is that movement that gives you interest on your cash? Yes, sir. ELB. Yes, sir. Yeah. If you want to get this brokerage, again, it's in the link tree in my bio or very first link there. Oh, if you're on the YouTube stream, it's actually in the link in the description. Yeah, you can just type it into Google. You don't have to use my affiliate link. Broker called Moomoo. So let's see. Hey, Mike, dude. Hey, Mike, I didn't see that earlier. Thanks for that gift there, Mike. If you got a stock you haven't looked at, let me know there. So Colombian Oil. What's the ticker symbol for that one? Yeah, hey, you know what? I'll type it in for Eledon Pharmaceuticals. What up, Joe? Let's check it out. So Eledon Pharmaceuticals, yeah, we don't really cover these kind of stocks on the channel. Sadly, they're at an all-time low, and the whole company is worth $109 million. So let's go do some analysis. This whole company is worth $109 million, and they're a startup. So if you go to the revenue, they have no sales. So we click on revenue right here. It says no data because they're a startup. They've literally never sold a product or a service ever. So there's no revenue. And no wonder they're at an all-time low. This is the kind of stock that just sadly is going to continue to go lower, lower, lower. They lost 35 mil, 17 mil, 6 mil. Yikes. And That they dilute you when they can. Not one I'd want to own. That's unfortunate. Nothing below. Like they don't even sell anything. They need to. They need. Here could be a fun little catalyst whenever they start selling a product. Here's another one that investors are really disappointed about. Someone said VKTX, they have 4 patents. This is another one where they got FDA approval for their product right here. And it was great news. It's like, this could happen to Eldon too. They finally got FDA approval for their product. But the reason the stock has fallen so much since then is because they have not executed well at all. They have delayed the release of this product, like to the point where there's still no revenue expectations, again, still for another 6 months. And that's the tough part about Viking Therapeutics. They're a $3.9 billion company, and still no revenue, no sales, and they're starting to lose a lot of money. 100 mil, 60 mil, 45 mil. So, that money has to come from somewhere. So it slowly trickles down their assets. But luckily, they still have a lot of cash on hand. They can afford a lot more losses. But I don't know. I don't know about Viking. Okay. GILD. This is your gene splitting company. Sadly, this is another one, or actually, let me go look at their numbers. Maybe not. Oh, wow. Actually, all-time high. Maybe I'm thinking of, oh yeah, that's Exact Sciences. I'm thinking of Exact Sciences and okay, let's check out their numbers because that's what matters here. Oh yeah, this is this is a good stock. Let's see. So they sell Biktarvy, Discovery, and they get royalty revenue as 5% of the revenue. So it looks like they sell a bunch of different prescriptions. Where do they sell it? So 71% of the revenue comes from the United States. That's interesting. Let's see what the earnings hub says. So the HIV, that portfolio grew 4% to $5 billion. Liver disease segment revenue increased 12% to $820 million, driven by performance of Livdizzy. Oncology pipeline progressed with supplemental applications. And okay, let's go look at their numbers down here. So the revenue, so a bit slow, low single digits, 2.9, 1.8, -1. So low single digit growth rate. But the stock is still at an all-time high. That's the crazy part. So low growth, but that can't be real. Those margins aren't real. No way. Legit. That was real. That was after they paid. This is after they paid $450 million of taxes. This is why the stock is at an all-time high. I think they have a 40% net margin. That's insane. So the sales are up by 2. Boring. Revenue's up by 2.9, but the net income is up by 143 from this net margin expansion. So that's a real 39% net margin. That was impressive. So they beat it. So look at this quarter specifically, and they beat on revenue. They beat on EPS by a massive chunk and on EBITDA by a massive chunk. So, hey, that explains why this stock is at an all-time high. This isn't, I was thinking of Exact Sciences. Hey, congrats if you own that one. That actually looks like a real nice name. Okay. Hey, what up, Rand? Good to see you, man. Hey, thanks for all those gifts there. I appreciate that. If you got a stock you want to look at, let me know there. Let's see. What's a good XAU USD trade? That would be IAUM. This is literally the commodity of gold, XAU/UAD in an ETF with the lowest expense ratio. There's GLD and IAU with double and triple the expense ratio fees. This is the lowest one. I've looked at all of them. 0.09% expense ratio fee. And then you get IAUM. It's literally the commodity of gold. And it's almost always makes more sense to buy this ETF over physical gold, especially if you're buying gold in smaller quantities and if you're paying to store it. And whenever you buy and sell it, you're paying the percent spot fee prices. It's almost never makes more sense to buy physical gold over IAUM. But unless the whole electricity grid goes down, but it's SIPC insured too, ran by BlackRock. Okay. Because I guess the thing with gold, it's like, hey, if the world ends, we want the physical gold in my safe. But a lot of people, they pay to have their gold in safes in banks and in places where, okay, let me stop talking about gold. But I don't own any gold. Sorry, that we're back now. It just disconnect. Okay. Let's look at some more stocks here. Yo, Dominion. Hey, what up, Ian? What's the ticker symbol for that one? Let's see. IMSR. Let's check this one out. So this is terrestrial energy. Looks like a $1 billion company. So they have $1 billion market cap. Um, then we'll look at hey, I'm Michael. Hey, what up, EL? Good to see you, homie. Yeah, we can look at Tesla too, and we'll look at L&T. We'll look at some of these other names. So here's terrestrial energy. It's only $1 billion market cap. Do they have short interest? No. So engineering service revenue. Where's the revenue come from? All the revenue comes from the US. There's no expectations, such a small company, so there's no analyst coverage. That's so weird. Did they just IPO? There's only one earnings report. Did they not? Wait, they might. I think they don't sell anything because it says there's 2025 Q2. They lost net income, but there's no 25 Q2 for sales. That means if there's not one there. That means they didn't sell anything. So they actually are a revenue-less company, I think. I wish I'd give you more thoughts on them. Probably wouldn't touch him. Hey, watch out for the person in chat there. Hey, actually, I can copy this guy's username and get him fully banned off TikTok. I got a friend now. This is so awesome. Have you ever see those chats in my chat? They're like, I'm paying $5,000 to the first person that you. What? Don't worry, that guy will be permanently off TikTok in just a few minutes here. But watch out for people impersonating me. Just know I literally sell nothing. I have no course, book, WhatsApp, Telegram. I'll never ever follow you, never DM you, literally nothing. The only thing I do have is a YouTube channel. It's called Nathan Robert. You can type it into YouTube. It's just called Nathan Robert. I'm also streaming on there, but I literally sell nothing. So please watch out for people impersonating me. L&T right here. So Alliant Energy. So this stock is at an all-time high. So congrats if you own this name. They're a $17.5 billion company. Looks like a utility name. Let's see. Yeah, 3% dividend yield. These utilities, they regulated. Yeah, so a regulated utility, super safe 3% yield. So Interstate Power and Light Company, they're kind of like, that reminds me like Florida Power and Light, Wisconsin Power and Light Company. So yeah, they make these consistent net income numbers of 150 to 250 million in net income every quarter. Hey, sales are up double digits now. Looks like the government allows them to raise prices. So what's so cool about regulated utilities is that even if they don't collect the money that they would from all their customers, the government guarantees them a return. But also, dual-edged sword, they don't allow them to make over a certain amount of money every year, and they don't allow them to raise prices at all without regulatory approval. And they never allow you to raise prices unless you can prove that your costs have gone up. But anyway, what I love, if we just go to the whole VPU ETF, I love this ETF right here. This doesn't even include its amazing dividend, but it literally just returns 7 to 8% every year, just consistently. 2.5% of that, 3% comes from dividends. But anyway, VPU is just all the top, utilities by market cap. So Nexstar Energy is the largest. Then it's Constellation Energy. Out of all the utility stocks that exist, my favorite growthiest one that I think exists is CEG, Constellation Energy. They're the number one nuclear play of all time, actually. They legit own 30% plus of all the US's nuclear reactors. Pretty cool, actually. Okay, what's your portfolio? Well, hey, I actually got multiple portfolios here. Not sure which one you're talking about there. But yeah, if you want to see a full stock portfolio update, I do that at the very beginning and end of every stream. And also, I do a million stock portfolio updates all the time on my YouTube channel. So yeah, by the way, best way to support me if you just want to, it'd mean more to me than donating a rose. Just subscribe to my YouTube channel. I'm really trying to build up my viewers there. I barely get any viewers on YouTube. So if you want to help me out, just subscribe to my YouTube channel, watch the stream from there. It's called Nathan Robert. It's also in the link tree in my bio. Yeah, you can just type in YouTube Nathan Robert. And of course, I sell nothing. I have no course, book, WhatsApp, nothing like that. Here's Qualcomm. I have a really fascinating thing to tell you about Qualcomm. And I learned this in the Morningstar research. Did you know, this is really cool, Qualcomm collects royalty income on all the majority of 4G and 5G phones sold, as it holds many of the essential patents used in these networks. So they legit collect royalty revenue. We consider their smartphone chip market shares at 26%. It is down from 30%. I know like Apple's making their own chip now. So they own Snapdragon, if anyone's heard of Snapdragon before. But if you go to their net income this quarter, this was a one-time adjustment. It says they lost $3 billion in net income. They did not at all. They actually made $3 billion. So one-time adjustment. That's why the stock reacted weird. The EPS went negative. It didn't actually. It was a one-time adjustment, which is great news. But yeah, if we can see the dividend, you have a great dividend, a 2% plus dividend. They raise the dividend every single year. And again, if we exclude that one time, they're easily making 2 to 3 billion of net income a quarter. Let's go see how much the dividend costs. So they're making basically 2.8 billion in net income a quarter. The dividend cost only 957 mil. And how did the cost go down from 968 million? That's because they're so shareholder friendly company. They're spending 2 billion a quarter on share buybacks. I mean, that's insane. And here's what share buybacks do for you. If you go to the net income, it's tough because it says negative 200, but say net income is negative 206%, but the EPS, well, anyway, Qualcomm's interesting. What ETF you recommend? Yo, first off, just the VOO, the S&P 500. Most hedge funds and retail investors, just everyone, the average person just cannot outperform the S&P 500. Like, I cannot explain enough that you need to have the S&P or like the QQQ as the backbone of your portfolio. Then I play around with some individual names that are also in the S&P 500. Buy high quality companies that you know, love, and use. Google, McDonald's, Constellation Energy, Meta, United Rentals, HCA Healthcare, Amazon, Pfizer, Disney. I don't know. These are all names I own. I'm totally biased, but I got AMD. So yeah, invest in what you use and not. Like, let's say you use Ford. You don't just want to invest in Ford. They're kind of junk. You want to also do your own research on them. So yeah, I think Meta's a steal of a deal. Meta's a great stock to buy, never sell right now. Microsoft's great here. Hey, what up, Jay? Good to see you, homie. Gilead is a great biotech stock. Yeah, hey, what up, Edwin? Oh, wait, I wanted to get to, what up, him? Thanks for the stream. Thanks, Jay. No, hey, Edwin, it's not a 0. It's not, you don't combine the two. That's not how that works, Edwin. The total expense ratio fee is actually just 0.09. Okay, I believe. So let's see. Well, fine, we'll do Tesla here. So Tesla is a tough story for me to pay. If you don't know, like, I've literally looked at the 2028, 2029 EPS projections, like literally the Wall Street EPS growth rates. $150 of Tesla's current stock price is literally future hopium for the robotaxi network and the cyber cab, robotaxi, and robotics. It's so much future hopium to pay for that I personally cannot pay their premium. But Tesla just has a mind of its own. It's never traded off real fundamentals. But if we go to the valuation, they trade at 272 times PE. It's okay to trade at 270 times net income as long as you have high growth. And Tesla, unfortunately, kind of lost its growth. If you go to the revenue, it is up year over year. Like, it's up 11% year over year. But look at last quarter. It was down 11, down 9. For a Mag 7 company, look, here's another crazy thing. The sales were up 11.5. The revenue's up 11.5, but the net income fell 36%. And that's not some one-time adjustment either. That was real. The net margins have collapsed on this company. Low net margins now. So sadly, everything is not, I cannot personally pay for its current market cap. Like 1.32 trillion, I don't know. I feel like there's going to be so much competition, but like already Amazon is beating them by far in robotics, and Google is already beating them by far in the robotaxi network via Waymo. I just think there's a bit of hopium on Tesla that I just can't pay. What app is this? Yo, what up, Leo? Yeah, by the way, this is a brokerage where you buy stocks on. If you want to get this app, it's in the link tree in my bio, that very first link there. Never invested. I'm interested in getting started. How and where do I actually open a portfolio to buy stocks? Yeah, hey, Morden, I would get this one right here. This brokerage I'm on right now, it's completely free. Actually, you don't even have to pick this one. I have all these brokerages all in the link tree in my bio. They're all in the description. These are all my favorite ones. I use all these. But of all three of these apps, I'd recommend this one right here. It's called Moomoo. It's the very first link in the link tree in my bio. 0 commissions, cost nothing, 0 fees, best analysis tools. You can track all the super investors. That's why we've been using this app the whole time, because we've been deep diving into stocks. So let's see here. Yeah, hey, what up, Todd? Can you analyze Axon? Yo, I do own Axon, actually. I actually own them in my Webull portfolio. We're down bad on them, That's why don't listen to me. I'm not an expert, Look at this portfolio. I just love being fully transparent. Look at this. We're only up 7.5% all time in this account. So we definitely underperformed. But one of the stocks we do own is Axon, and Axon had some disappointing earnings. The valuation is nutty. I'm talking more expensive than Palantir and Tesla. The forward PE is a 413. So they are trading at 413 times next year's net income. So absolute bonkers valuation, but this is a quality name that I still own. They make exclusive for the UK police force, all their body cams, all their tasers, and for most US military, US police stations as well. all of their body cams, tasers, and their cars' body cams are all on Axon. They're all owned by Axon, and Axon also has this cloud, a number one drone defense play in the world. So many police stations use it. So many royal families use it. I have so much to say about this stock. Like it would bore everyone, but the disappointing part was this net income. The net income actually went negative this quarter, and that was really real. Like the core business is losing money every quarter right now. Still really good growth. Revenue's up 30 after 31 after 32, but the net income is really collapsing right now. I'm telling you, this one's heavily on my watch list to like buy reasonably at like $360. Like I really want to buy more of them. Hey, what up, AC? Let's see here. VOO. Yeah, hey, this is like the lowest expense ratio ETF. Yeah, if we go right here, there's the expense ratio and the management fee. This expense ratio includes the management fee, I believe. So 90% certain about that. So anyway, that's why it says that. But anyway, yeah, VOO, literally just the S&P 500 breaks your money up for you into the top 500 companies by market cap. BYDDY. Let's check this one out. So yeah, this is the basically Chinese. This is your China manufacturing play. I mean, they legit have their car production facility the size of like Atlanta. Like, I think I made a short about it, but it's so long ago I'll lose it. I really want to find the video, but it would take too long. You wouldn't believe how big their factory is. Like, I literally couldn't believe it. But anyway, if we go down here to their net income, they're actually making more net income than Tesla. We've converted the currency from Chinese yen to USD. But yeah, they're making like $1 billion in net income a quarter. You get a 1.55% dividend yield. Let's see here. Automobiles and related products. Check out the annual sales growth. Actually, BYD is entering Europe's market right now. Oh yeah, hey Papa Dan. Yeah, he said I like them big in Europe. Yeah, I'm actually surprised Europe is allowing Chinese cars to just take over the market, because if we did not have tariffs and we didn't want to save our own car manufacturing, America would be full of Chinese cars. Because quite frankly, they're cheap, but they're also like good for how cheap they are. For like anyway, but. Yeah, 71% of the revenue is China. Then overseas is growing. Let's see, that's 30 billion for the full year 2024. What about full year 2023? Yeah, it was 22 billion. And it grew to a bigger 2% bigger of their whole entire portfolio. Yeah, net margins over here for low single digit margins, which makes sense for the industry, but it's impressive. Hey, what up, Lee? It says SBNY stock. Yeah, we'll look at a few more stocks, and then I gotta go, sadly. Hey, I actually said, wait, SBNY. Oh, I typed it in wrong. Signature Bank. Actually, I don't think this is the stock you're talking about. Yeah, they're only worth $40 million, and they're at an all-time low. Yeah, that's from 2022. There's no data here. Yeah, I don't know. I think that is a bankrupt bank, sadly, with no assets anymore. Cop here. Yes, Axon is everywhere. Yo, that's awesome. Yo, thanks for your service. Yo, I'm pretty sure like they make the Axon tasers and the body cams and the cameras for the cars, and they own like the cloud software for it as well to store it on. So that's what's cool about Axon. They also own Dedrone, which is a very fascinating company. It's, Dedrone. Do I dare go to their website? I would probably not, but okay. Like the royal family of Qatar uses it. A bunch of police stations also use their Dedrone. You know what? Let me pull it up. Hopefully we don't reveal anything here. Dedrone. This is owned by Axon, and this is a fascinating company. The number one drone defense play by far. So they make these devices right here. Zero install, multi-layer drone protection on site. Where does it show the customers? Yeah, airports use them. Yeah, VIPs and private company. I've like went through this whole website. It's pretty interesting. Yeah, the royal family of Qatar is very satisfied with our product. 1,130 sites have deployed their Dedrone products. I wish I could show you more about what they do. But anyway, I really like Axon, and I own one share of them in my Webull portfolio, down 30% on them. But certainly interesting. They're heavily on my watch list. I'd love to buy them, but at a much lower valuation. So here's Dominion Resource. So This one is the same price that it was back in 2013. So unfortunately, this stock has not done too well. Let's see. So you get a 4.3% dividend. Looks like the payout ratio is over 100%, and the dividend got cut. Yeah, it used to be higher before COVID. So let's go analyze them though right now. So Dominion Energy, Virginia, South Carolina. So it looks like a utility company. And they're making, if you average out here, let's say they're making 750 million of net income a quarter. So they're making 750 million in net income a quarter. The dividend cost 570. So they are able to afford their dividend. Looks like they did have like if you go to their net income, they had a one-time adjustment. It says the net income was only 170 mil. Well, it was actually around 500 mil. So, looks like they've been one of the worser performing utilities, but it does appear the 4.3% dividend is safe around that 70% payout ratio. Does Yahoo give a snapshot? Hey, I'm not sure. I don't use, or PINXY. What's that one? People's Insurance. These are some weird ticker symbols. Then there's no look. There's no volume here. You rarely see that. There's no volume on this stock. It's a Chinese company. Non-life insurance. 71 billion in revenue. Mainly all the revenue comes from China. Yeah, so it looks like a Chinese health life and Chinese UNH, we'll call it, or a non-life insurance. But that appears to be real. I mean, they made $4 billion net. Wait, 2025 Q3. We're missing some other quarters here. So I wish I'd give you more thoughts on this company. Yeah. I'd rather buy a US insurance company like Progressive. Progressive stock is my favorite insurance stock, and I do own them. I haven't covered them in a long time, but Progressive stock, we're down 6% on them, is worth buying and never selling. And I'm not just recommending them because they're well off all-time highs. I'm recommending them because they're a good, high-quality company. Here's their personal lines revenue. It's up 16%, after grew 24, after grew 58, after grew 11. So this business literally just hits a new record every year, every quarter. Really good growth. You know, the insurance companies are milking us, sadly, but if we go to their net income right here, this is the best part about Progressive. Very consistent, easily 2.5 to 3 billion in net income a quarter. What is Progressive doing with that money? Well, they pay a dividend, and their normal dividend only cost, where is this? If you look at the top right, 58 million. So the normal dividend only costs 58 million a quarter. But then why does it say negative 2.7 billion in the middle? That's because what's so fascinating about this stock is, and of course they could easily afford that. They literally made that amount of net income this quarter. They reward you every Christmas time, every December. Like they pay you normally just 10 cents a quarter. They reward you with a special dividend at the very right after Christmas. So $4.50 special dividend last Christmas. The one before that was like $1. So I think this next special dividend is going to be a new record. So anyway, that's a cool insurance stock. Hey, what up, Beach? It says WPP. Yeah, we'll look at Microsoft too. I really like them. We'll do Microsoft after this. So here's WWP PLC. PLC stands for publicly listed company. Let's just go to their website. I have no clue what this company does. The AI for marketing. What's their market cap? So they're headquartered in London. So this is a UK stock. Okay, they're a $4.3 billion company. So they're in UK. So we're going to convert the currency to USD just to get a better understanding of this. But yeah, global integrated agencies. Looks like it did, like on an annual basis for the full year 2024, it fell 1% from 2023. Public relations, or let's just go to revenue down here. So revenue, it's up double digits. Actually, looks like the growth came back. Oh wait, this is wrong. This says 2008, bro. Like they don't give the most recent numbers. That's so weird, and it's not. I wish I give you more thoughts on them, but I can't. I don't know. Probably wouldn't touch them. So let's look at Microsoft right here. This is a great buy and never sell stock. Like literally just diamond hand Microsoft. The forward PE is a 29. That's why we're not in a bubble right now. Valuations aren't nuts. Like This is the AI toolkit of the future. Literally every company in one way or another like uses Microsoft, whether it's Windows or their business productivity suite softwares like OneDrive and Word and Office 365, all that. But if we go to just that software business, they've converted from a hardware to a software business. This is over 120 billion of annual revenue for them. They did 120 billion of annual revenue. Is in that business. They also are a big cloud service provider now. Their Azure cloud did 30 billion this quarter. That's also over 100 billion a year. So Microsoft is just a beast. And if we just go to their net income, easily 25 plus billion of after-tax net income a quarter. That's what's nuts about Microsoft. And they reward you with dividends, share buybacks, investing in the future. So they also just rose the prices on their Office 365 stuff. So if you look at Costco, let's do Costco real quick. Costco, such a quality company, but unfortunately, the PE is too high for me to pay. They trade at 49 times PE. That's a really expensive valuation. And they're trading at 49 times this year's net income. And how are they they can't really double this net income again. The valuation's too high for me to pay, but Costco is a stock that definitely deserves a high quality, or it's a high quality name that deserves a high quality multiple like that because their model is amazing. You have to have a subscription to even get into the store. Where do you go to the store or not? They're collecting that subscription revenue. And whenever you go to the store, you're buying stuff in bulk. So as a consumer, you feel like you are getting a good deal. They got the loss leaders like the rotisserie chicken, $1.50 hot dog, all that. I think Costco also just switched from Pepsi to Coca-Cola. All right, let's see. CJRPY. I hope I can wait. That's a weird ticker symbol. CJRPY. I typed that one in. Unfortunately, I couldn't find that one. Futu. Futu, I think is a steal of a deal. I own this one in this portfolio right here. If you're wondering what is Futu stock right here, FUTU, that is literally, you see this app I'm on, this brokerage I'm on right now. So this app I'm literally on right now is this stock is this app I'm on right now, publicly traded. And I keep my assets in here, I keep my stocks in here. You want to know that your brokerage is doing good. Let's say this company goes bankrupt, you're still FDIC insured for $250K and you lose nothing. But it's good to know that this brokerage is printing net income. They made 413 million of after-tax net income this quarter. Look at the sales. The revenue was up 86. So the revenue is up 86, but the net income is up 143, which means the net margins expanded. Net margin from a 38 to 50. 50% net margin is nuts. They make this interest income right here. This is how brokerages make their money, at a record up 79%. Look in the middle of my screen right here. They give this to you for free. They give you a 3.6% APY on your idle cash, but then they earn a little bit APY as well on top of that. They pocket the difference. They keep a little. So they just make a little bit of interest on top of the interest they give to you. So that's what's really cool about this app. But yeah, by the way, if you want to get this brokerage, I'm on my favorite one. Free, literally costs nothing, no commissions at all. Link tree in my bio, very first link there. And this brokerage I'm on right now, here's their stock publicly traded if you wanted to look more into them. But yeah, we can see their users. They have 28 million users. 141 billion daily active things anyway. Oh yeah, their other income, they introduced crypto to the app now. So this revenue is growing triple digits every quarter. I just love everything about this company. Everything's growing. Sales are at a record, net income's at a record, margins are at a record, and they reward you every December, basically every single Christmas with a special dividend. Hey, what up, Vacay? Nice, I appreciate that. Do you have Costco or Walmart? That's a great question. Probably, they're both like the same thing. In the long run, they'll probably perform nearly identically. But I guess Walmart. I'll just pick Walmart. I don't know. Hey, don't worry about it. Let's see. Wait. What do you think about Nvidia? Do you think there is Nvidia? So, what up, best? Good to see you, homie. I think Nvidia is a tough double. It's hard to buy shares of this one because if we look in the top right, the market cap, the whole company of Nvidia is worth $4.35 trillion. So for you to double your money, they basically have to be worth $9 trillion. So again, this stock deserves to be doing that well. And if you buy Nvidia right now, I still think you're going to keep up with, if maybe probably outperform the S&P 500, just simply buying Nvidia shares right here. But I would rather buy some of the Nvidia beneficiaries, and that's what I have been doing. that benefit from Nvidia doing so well. Like, check this out. They made 32 bill of net income this quarter, after paying 5 bill of taxes. But if another company can pull off this sort of net income growth, then they also deserve to be worth 4 trillion. The revenue is up 57 billion in revenue. Look at this, 57 billion in revenue. And out of that, 32 billion of that was after-tax net income, 55 or 56% net margins. So yeah, if your stock has this sort of triple-digit growth rates in the middle here, they also deserve to be doing as well as Nvidia. So yeah, but yeah, you could buy some of the Nvidia beneficiaries like Comfort Systems, the one that cools down the chips with their HVAC solutions, to Amphenol, who's the main provider for Nvidia for their copper cables, to Powell Industries, who does the switchgear solutions for the high voltage data centers, and like Supermicro, who installs the chips for you. I would totally not buy Supermicro. It's kind of a junk stock, but maybe look around for some of the beneficiaries. And you like even a CEG, a Constellation Energy. This is a purest play for nuclear energy. They own 30% of all the U.S. nuclear reactors. These data centers got to get powered forever by electricity somewhere, and nuclear has been super popular. Okay. Thoughts on QQQM? Yeah, that's my favorite. So a lot of people know the QQQ ETF, but a lot of people don't know about the QQQM ETF. It's literally the exact same thing as the QQQ, the exact same NASDAQ 100 strategy, both run by Invesco, with the exact same weightings and holdings to the T, with the exact same stock price performance, just with a lower expense ratio. Of course, they go out of their way to market QQQ, because why would they market QQQM and advertise it? Because then they make less expense ratios. So they go out of their way to market QQQ and not tell people about QQQM. This is performs identical, not even by like a 0.1% difference. Identical. Okay. Feel free. Hey, of course, none of this is financial advice. Always do your own research. I sell nothing. I have no course, book, WhatsApp. Watch out for people impersonating me. So, CJPRY. So this is Central Japan Railway. I know Japan loves their railway systems, like their speed trains. Let's convert the currency from Japanese yen to USD. So yeah, transportation industry. Let's just go to rev. Oh, wow. Look at this net income. And this is in USD as well. And the growth rate. They're easily making 500 million to $1 billion of yeah, that's after 4 to 50 mil of taxes. That's insane. So what's the multiple on this company? So they're trading at 7 times net income. That's pretty fair. You get a 0.4% dividend, low single digit payout ratio. So there you go. This is your Japanese railway company. Let's see if it lets us view their website. It probably won't let us view their website because it's see, this shouldn't be taking that long to load. Oh well. But yeah, pretty cool actually. Then that's I'll put them on the watch just for fun. All right, we'll look at Oracle. Okay, yeah, Oracle. Sadly, people have been using Oracle to like short OpenAI. Wow, they're down 6.2% on the day. Oracle Health Network subsidiary designated as qualified. What? Oracle plans $38 billion debt issuance. Yeah, the one thing that's already sucked about Oracle is how leveraged they are. If you look at the liabilities right here, they have over $100 billion of debt. But they make $3 billion in net income. If you look in the middle here, they're making $3 billion of net income a quarter, but they only retain half of that because they pay a dividend, and the dividend cost $1.4 billion of net income a quarter. So that's why their yield is near 1%. But one thing that really led to a crazy spike up in Oracle stock price on earnings day was the fact that their backlog grew 300% out of nowhere in just one quarter. So there's a lot of future growth expected. I don't know though. Honestly, if you just want a cloud play, this one might be one of the more expensive cloud plays. Like, obviously, it's not a pure play, but the Google Cloud, the AWS, number one market share is already AWS. Oracle has like a 5% market share. Then it's Google, or then it's Microsoft Azure Cloud. Then it's Google Cloud. So a safer, probably cheaper, maybe way to buy is just you'd rather buy Amazon or Google. I mean, look at Amazon. The most valuable part of Amazon is their AWS business. It's their highest margin business. It does over easily $100 billion of revenue for them. It hits a record every quarter. Number one market share. So Google Cloud is insanely well. TTWO, let's do this one right here. This is the company that owns Rockstar Games, and they just announced something devastating that GTA 6, this is a company that owns Rockstar Games, so that's GTA 5, GTA 6, Red Dead Redemption. They're delaying the game release till November to December 2026. So we got delayed a whole nother year for GTA 6. Very sad. But that's why the stock has done so well, because they're in a unique position where they have this asset, this game that they're about to release, and whenever they release it, it's instantly going to bring them in billions of revenue. And future revenue. So we're really waiting for that game-changing moment to happen. Very few companies are in a position where they have this like insane game that the whole world is anticipating that's going to bring in. We're never get GTA 6 at this rate. Okay, so we'll look at one or two more here. So they got to go. Damn, we've been streaming for over 2 hours. Yo, by the way, if you want to hit the follow button, we stream every day, sometimes twice a day. I literally sell nothing, no course book. So here's the URE. This is the real estate ETF. And yeah, the REITs, the real estate investment trust, don't ever outperform the S&P 500 in the long run. Like this ETF is the same price that it was in 2016. But what's so cool about this ETF? Well, it's not so cool because it's still massively underperformed. You basically are buying this to maximize your income. You get a 2.26% dividend, breaks your money up for you into all the top REITs. I love Welltower. Honestly, you don't want to buy a REIT ETF, not financial advice. I would pick and choose my REITs individually. Welltower is a senior housing care one that I love. Public storage, phenomenal one. I only own one REIT, and the one REIT I do own is in my Roth IRA because, again, REITs don't pay qualified dividends. They pay whenever you receive dividends on them, it's taxed at a higher tax bracket. Short-term capital gains and not long-term capital gains. I actually own Iron Mountain data center REIT. So, all right. Did we find the bottom yet, or dip further down next week? I don't know. That's why I never know. I wish I could pull out the crystal ball. So that's why I wouldn't spend all your cash today. Like I don't recommend anything, not financial advice, but you should dollar cost average. Don't spend all your money on one. Slowly buy into an asset. It's a more disciplined, patient approach. So especially in right now's environment when the market's so choppy. So yeah. All right. The last one here. Henry said Nebius. All right. Hey, what up, Pudgy? Oh, hey. All right. Maybe we'll do Symbiotic. But if we go over here, well, for Nebius, that's actually stock in the NVIDIA portfolio. So if we go to the NVIDIA portfolio, obviously they own CoreWeave, VPLD. They also own Nebius, and they got a $17 billion deal from Microsoft. So a big chunk of the Microsoft cloud is going to be on Nebius's data centers. But this is why you should buy the stock. Jim Cramer warns investors to stay away from Nebius. So that means you buy the dip on Nebius. But honestly, I wouldn't have this stock as a big size position. What I do love is how growthy they are and the growth expectations. Check this out. The revenue went from 32 mil to 150 million, a 4x increase, and added this, that was a record. 146 million was a record. Analysts are expecting in 2 quarters, 460 million. Sadly, right now they're still losing 100 mil a quarter. They lost more than expected, but in 2 quarters they're only supposed to lose 39 mil. So and the revenue is supposed to basically more than double to 500 mil. That annualized is 2 bill. So 20 bill market cap. Anywho, was there any revenue growth that's driven by AI infrastructure demand? Significant partnership with Meta. Okay. Yeah, that's Nebius. So, anywho, I hope you guys have a great rest of your day. If you wanted to follow button, we stream every single day. The best way to support me, if you do want to support me, is just subscribe to my YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio. But yeah, just type in YouTube Nathan Robert. I sell nothing. I'll never follow you, DM you. No course, no book, nothing like that. But yeah, see you all very soon. We'll be live tomorrow at this exact same time. And thank you to everyone on the YouTube stream. Y'all are the best. Thanks for being here. See you later. B-Tish, EL, best, everyone.